I keep getting comments on the due on sale clause. You guys searched the search bar, right? Like you went to my YouTube channel, typed in paste Morby due on sale clause. Like you already did that, right? Okay, cool. So you already searched through the playlist? Oh, you didn't? Oh, this is a joke. You're pranking me. You didn't look at the last couple of years of 9 or so videos that we've made about due on sale clause? Guys, let's break this down one more time. And we're gonna give you a whole entire playlist to make sure that you have all the videos I've ever compiled about the due on sale clause all in one fancy dancy little playlist. Before you get to the playlist, I wanna make sure we whiteboard and explain to you what the due on sale clause is and how you can overcome it. And then the playlist will hopefully fill out any gaps in anything I don't cover today. Most of the time people are worried about due on sale clause as it comes to subject to, right? When people are doing subject to transactions. If you want a full subject to real estate video, click somewhere on the screen. My team will put a button on there. You can go and watch that. Amazing video. It's like 40 minutes long explaining subject to, way longer than I'm going to explain today. But essentially in a sub-to transaction, PACE, or you, the investor, we're looking to avoid banks. We're looking to avoid credit. We're looking to also help a seller in a situation that subject to actually helps. I have a seller. I called her last week. This is a real story of a real deal we're actively in contract on. Ginger, her husband, got hit by a semi-truck. Semi-truck hits her husband. He loses 3 limbs. He loses also the ability to pay his bills because he lost his ability to earn money. Their family is now 4 months behind on their mortgage. They're going to lose their house. Well, you might say, if you're a real estate agent or a broker, you might say something uneducated, like, well, why doesn't she just sell this house on the market? Why doesn't she put this on the MLS? Well, the reason why that's uneducated is because you don't understand that this family bought this house with a VA loan. And if they bought this house with the VA loan, that means they put little to no money down, okay? So this family, they owe $450,000 on the house, and it's only worth $460,000. So they can't sell it on the market. They have no equity. They don't even have the money to pay their real estate agent, so they're going to lose their home. And if she loses her home, Ginger, she not only loses her home, her credit is smashed and she has a foreclosure on her record for the rest of her life. So beautiful thing about SubTo is it actually helps sellers in these situations. The agent that I spoke to, her name is Gina. Maybe we'll make a link to the call down below. I'll give you guys a nice freebie so you can watch the call exactly the way it works. And I also went to the appointment, talked to Ginger, and explained to her exactly what subject to is. So if you want that, we'll put that down in the description down below. I record all my appointments in person. I want you to know I actually do this business, and this is a house I'm actively working on right now. So I go to Ginger, I say, Ginger, you can't sell the house on the market because you don't have any equity. And you, my friend Ginger, who's behind on your 4 months of payments, if you sold your house right now, you would have to write a check to get rid of the house. Why? Because she owes the bank $450, okay? If she owes the bank $450 and she sells the house for $460, she has to pay her agent, she has to pay another agent, she has closing costs, plus she has 4 months of back payments to catch up. She would end up writing a check somewhere around $20,000. So let me ask some of my broker friends or some of my real estate agent friends out there in the traditional real estate world, how does an agent help a seller who doesn't have $20,000 to get rid of their house and is also in foreclosure and has 3 kids under the age of 4 with a husband that just lost all 3 limbs? How do you help them? Well, the answer that Gina honestly gave me, she's the agent on the deal, Gina says, I can't help this person. What I was given in tools from my traditional real estate career does not allow me to help this seller. Okay, so what we're highlighting here is that real estate investors like me who are not licensed, nor will I ever be licensed, I actually have tools like Subject To that can come in and help this seller out. The agent actually says that in the recording. She says, thank goodness for you. You are the answer to my client's prayers. Okay? Now, some people are going to say, get right to due on sale clause. Well, I got to understand that there's some people maybe watching this video for the first time and they need a little bit of context before we get to what the due on sale clause is. So Ginger, the seller, agrees to sell her house to me and let me take over her payments. That is called Subject To. She says, I got a really great rate, Pace. My rate on this house, okay, even though I owe $450 on it, I have a rate of 2.9%. The interest rates right now are somewhere around 7%. Where can I, a real estate investor, get a 2.9% interest rate without a credit check, without going through a bank, without any credentials? I don't have to have a W-2. I don't have to have a license. The only way for me to do that ever is using SubTo, which is what I teach. It's what I'm known for. So I want that 2.9% rate, and I'm okay with buying her house at the number she needs. Heck, I'm even okay paying the agent. I'm okay catching up these arrears that she's behind on. I'm okay paying closing costs because that rate is incredible. I want this house and I want to take over the payments. Now, if I'm going to take over the payments, I also want something that is very important. And that something that's very important is called the deed. Okay? So let's talk about this deed for a second so you guys can understand. That's what I get for not having Windex on the ready. So bad. I want something, not only do I want this house, and I want the 2.9% rate, and I want to avoid banks, and I want to avoid credit checks. I want to avoid all of the arduous journey. And some people will say something also very uneducated. What's wrong with you? Why don't you want to go through a bank? What? You're joking, right? Like, you want to go through a bank? Like, you want to go through the bank, and you want to go through all of this stuff and play all these games with the bank. You want to have all these things? I'm right now refinancing a $20 million property of mine in Illinois. It is 6 months to refinance that property. Who wants to deal with banks? You don't, and neither do I. And so SubTo is something that benefits me and the seller in a tremendous way. It's a win-win transaction. Cool. Well, when the seller, Ginger, she originally bought the house, she went out and got a mortgage, right? She went out and got a debt. Okay, this mortgage is like a credit card that allowed her to buy this house. She got a mortgage. Well, the mortgage is what I'm taking over, right? I'm going to start making the payments on that mortgage instead of Ginger. I will make those payments instead of her, thus rebuilding her credit, because right now she's in foreclosure. She's 4 months behind on her payments and her credit is getting smashed. If I let her go to foreclosure, her credit gets even worse and she has a foreclosure scarlet letter on her credit for the rest of her life. So I come in, bring that massive benefit to her. I take over the mortgage payments, no approval needed from the bank. I make the payments to the mortgage. Ginger now moves out of the house. She no longer lives in the house, okay? What I do with the house is I end up putting a tenant in the property, okay? And my tenant pays me more money than what I pay to the mortgage, thus giving me cash flow. Now, this property is not going to make me a ton of cash flow, but it'll make about $500 a month. Cool. So I helped Ginger get out of her situation, rebuilt her credit, take over the payments. My tenant pays me, I pay the mortgage, and if the tenant gets evicted, I'm a big boy. I know that that's what property ownership is all about. Just like you BRRRR buyers, those people that buy the BRRRR strategy, y'all go out and get loans to buy houses, and then you guys come in here and go, well, what happens if you stop making the payments? Same thing that happens if you stop making the payments, Mr. BRRRR investor that goes and buys from the bank and asks Big Daddy Bank for permission to buy something. Daddy Bank, can I please buy something, please? I'm not a child. I don't go ask for somebody else's permission to do something. You children, if you default on your payments, you lose the house. Guess what? If I default on the payments, the seller gets the house back and all the money I gave her and all the payments I gave her and all the rebuilding of her credit I gave her. She benefits in some situations if I default on the payments or I get abducted by an alien, okay? So let's get that question out of the way too. I've answered that on the YouTube channel 50 times. By the way, the YouTube channel does have a search bar. Go search for it. Be a big boy or a big girl. Use your resources, okay? So Ginger moves out. What's cool is we go help Ginger find another place to live. Her payment on the house is $2,900. She can't afford that now. She's a single mom, 3 kids under the age of 4. Her income alone cannot afford that payment. We go out and we find something for her. So guys, we're not just buying people's houses SubTo, we're actually helping them into the next chapter of their life. Find a real estate agent that does that. Sorry. The unlicensed investor has the solution versus the licensed person that actually went to school for this stuff? That's interesting. Okay, so not only do I take over the mortgage, this is where the due on sale clause comes in.
No! God, please, no! No!
I now want the deed to the property. The deed to the property is who owns the property on public record. So if you guys go to public records like the county recorder, it will actually show on this house that Ginger, even though her name is still on the mortgage, Ginger's name is on the mortgage. As far as the bank knows, Ginger is still making her payments. But where it changes ownership is through the deed. So the deed transfers. Who does the transfer? The title company does the transfer. I pay for title insurance. I go through a legal transaction through a third party. The company we use is Creative Title and Escrow. You can use them too, creativetitleandescrow.com. You can use them all you want. We'll pop up their logo right on the screen and you can see their domain. Go use them. They will do SubTo transactions in all 50 states, okay? So the title company takes the deed, removes Ginger's name from it, and puts the deed in my name. So now I'm the legal owner of that property, okay? This has now completed the subject to transaction. So I've bought the property SubTo. Now, some of you guys might say, well, that costs a lot of money. He had to pay up the arrears, he has down payment, he has closing costs. That's when I bring in private money lenders and they help out with those types of things. So if you guys need a video on how to raise private money, we'll put a link on the video here as well. Or you could just type in Pace Morby private money lenders on YouTube and you'll see I have videos on videos on videos that will help you out, okay? By the way, if you ever have an agent that criticizes me or a broker that criticizes me, ask that broker or that agent if they've ever done so much on YouTube to help thousands of people as I have. Pay attention to who's telling you what they're telling you, right? Maybe they're a little bit jealous that somebody figured out how to market themselves and talk about what they do in a very effective way to the point where we've got over 4,000 videos on YouTube at this point. Guys, like stop listening to the agents and the brokers that don't know what they're doing. Most of them don't do any real estate transactions anyway. What was the stat? We should pop this up on the screen. I think 71% of real estate agents last year did not do one single real estate transaction. Why are you following their advice? It's almost like if you have a license in real estate, you probably shouldn't be listened to. 71% of you guys did not do one real estate transaction last year. Immediately, 71% of you were discounted from giving me any advice, okay? So this is what happens is now the deed is in my name, right? So it's no longer in Ginger's name. The deed goes into Pace's name. So Pace now owns the property. It shows on public record. You can go to the county recorder's office and go, wow, Pace owns it on public record, but the mortgage is still in Ginger's name, right? This is a complete SubTo transaction. Now, where the due on sale clause happens is when the bank, which happens, come in here, Roberto, let's look at this right here. How many times out of 500 do we get the due on sale clause to ever happen? 1 in 500, maybe. So I can go do 500 real estate transactions in SubTo and maybe one of them gets the due on sale clause. And what exactly is the due on sale clause? It's where the bank realizes that Ginger's name is still on the mortgage, but Pace is now the owner on public record because the deed has transferred ownership. There's a physical document, it's one page that just shows the deed, the owner, and it's me. And the bank says, oh my gosh, Ginger sold the property. And so what they do, here's how this works. Watch how boring this is. The bank then sends the owner of the property a letter. They literally send me a letter. And they say, hey, Pace, in fact, I'll show it to you. Let me show you what a due on sale clause letter looks like, okay? The due on sale clause letter is so boring. It's pretty boring. It's a property in San Angelo, Texas, okay? It says, pursuant to the mortgage, you are hereby given notice of breach of contract in accordance with blah, 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 blah. Therefore, you are required to rescind the blah, 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 blah. If you fail to restore title within 35 days of this notice, additional costs will be incurred. There are no costs. This is not a fine. This is a letter. I didn't do anything illegal. They're sending me a letter. It's not a court subpoena. It's not them saying, hey, you violated a law. None of that is true. That is a lie. Your broker, your agent, whoever told you that is a liar. They're a liar, or they're just uneducated. They don't know they're lying because they're uneducated, okay? It's kind of like a 3-year-old saying Santa Claus is real. Like, they're lying, but they don't know they're lying because they don't know the truth, right? Cool. So I get a letter, and then the bank says, hey, You have 35 days to rescind. You have to take that deed and you need to put that deed back in the seller's name, or else we're going to be angry about it. That's what the letter says. So you guys are all up in arms about a letter that comes from the bank. The due on sale clause is such a boogeyman, it's unfreaking believable. The only people that have ever lost a house to the due on sale clause are people that haven't learned from me. Okay? So this letter, you got a couple of options of what you can do and how you can overcome this. Okay? By the way, are you learning what the due on sale clause is now?
Yep.
Okay. Even my YouTube team is learning more than most licensed brokers and agents, okay, from this YouTube video. Cool. So step number one, before we get to these steps, which we'll cover next, step number one is you call the bank. You call the bank. Okay, because 99% of the time when you call the bank and you say, hey, I bought this property subject to, I saved this lady from foreclosure and I've been making the payments on her behalf, 99% of the time the bank just makes a note and goes, okay, cool, now we understand what happened. Great, perfect, and we move on, okay? The other times, if you run into this, where the bank says, yeah, we don't care, which has happened to me as well. I had a bank called Johnston Bank. They said, we don't care. And how did I learn this? Did I learn this from a broker? Definitely not. Did I learn this from an agent? Definitely not. I learned this from an actual bank manager of Johnston Bank. He told me, hey, when we called him, Johnston Bank owner says, hey, I get it, Pace, you bought it subject to, but why don't you do what our other clients are doing when they buy subject to and do either A, an executory contract, or B, a lease option? I was like, oh, okay. Now, an executory contract, you might wonder, well, what is that? I don't know, maybe do the thing that you didn't do before, which was use the search bar of Pace Morby executory contract, and maybe a YouTube video will pop up explaining what an executory contract is. I know I'm being a little bit mean today, but sometimes y'all need a little jab into the ribs, just a little bit to, maybe do a little bit of homework. So the executory contract, essentially what an executory contract is the deed stays in the seller's name. We put the deed back in Ginger's name, and I have an agreement, okay? In each state is called something different. You guys have heard these terms, land contract, okay? Contract for deed, bond for deed, land contract, contract for deed, bond for deed, agreement for sale in Arizona. These are all the exact same thing. All four of these are exact same thing, which basically means the deed stays in the seller's name, but I have a private agreement with that seller saying, I am the owner. I just don't need anybody to know about it on public record. That's the simplest way to explain it. Go and type in executory contract on my YouTube channel. I've got videos about this. You'll learn some stuff. The second way to do that is a lease option. So I can send the deed back to the seller's name. By the way, all of this paperwork is done prior to the due on sale clause. And the seller knows. When I explain to the seller when we signed the original purchase contract, I tell the seller, hey, Ginger, hey, real estate agent representing Ginger, just so you know, we have a severe risk, even though it's 1 in 500, you should feel like it's 500 out of 500. The due on sale clause may and probably will happen, and you need to expect what's going to happen. We sign paperwork preemptively, planning on the due on sale clause happening. And for me, the majority of the time, I end up just buying the property on a lease option, which gives me still real estate ownership. I have the ability to still depreciate the asset. I just don't love the lease option because the deed, let's say the seller dies and I have to now go and try and get the deed. I'd rather just have the deed in my name from day number one. So for me, the safest thing is subject to. The second safest thing is a lease option or executory contract. And if you've owned the property for a long enough time, I have done these other things as well. I've owned properties long enough time, the due on sale clause pops up 7 years after I bought it subject to. 7 years. It literally took the bank 7 years to realize I was the owner of the property. Crazy, okay? So what do I do? I could sell the house on the open market, take all my equity because I am the owner of the property, and that ultimately pays off the home, and that satisfies the issue that the bank has with the seller giving me the deed. So that's the due on sale clause. I've never seen any of my students or anybody I know ever actually struggle with the due on sale clause. If you know somebody that's actually lost a home to the due on sale clause, guaranteed they're not in the SubTo community, and guaranteed they probably learned from somebody that teaches something really stupid, which is the land trust, okay? Land trusts are such a waste of time. I should do a whole YouTube video just about land trusts with my attorney, so you guys can just be like, oh my gosh, man, I've heard these people out of Florida talking about land trusts and how I should do a land trust. I don't do land trusts. Nobody knows more about subject to stuff than I do. I don't use land trusts because it's uneducated. The only people that will tell you to use a land trust when you're buying a piece of real estate are people who sell land trusts. Maybe I should start teaching you guys how to do land trusts and just start a land trust company and maybe make money that way. So we have a whole playlist that can just give you guys any questions you might ask. Keep watching, taking notes, and send this to somebody that keeps telling you, well, what about the due on sale clause? Guys, stop with the due on sale clause stuff. Watch the rest of the videos. You will love this playlist. It will change your life if this is something you're worried about. And if this is the first time you've watched this, I apologize for being a little bit jabby and like teasing and all that kind of stuff. Just my way of showing you a little bit of love. As you'll see, we have a whole playlist out here that we've been posting due on sale clause videos for like 4 years, and people still make comments on the YouTube channel saying, what about that? When I see their words, that's what I hear. Because it's like, did you not use the search bar? Did you not type in paste Morby due on sale clause? It's pretty obvious you're not a very resourceful human being, but you're resourceful. Those people are not. You are resourceful, and that's why you're going to watch the rest of this playlist. Enjoy.
Do we need to get approval from the bank? Should I call the bank? You know, something along those lines. And I say, well, let me ask you a question. I go, if I took over your groceries, do we need to call Chase and let them know you're going to let me take over the groceries and make the payment for you? No. Am I doing something illegal? Am I doing something wrong? The answer is no, I'm not. However, that does bring me to a third question that you probably won't even ask. And by the way, this is exactly what I say to sellers. I bring up something called the due on sale. If a bank found out that you transferred the ownership to me, but the debt is still in your name, every once in a while, we'll run into a bank that goes, hey, you sold the property, but you didn't pay us off when you did that. That's a problem. And we're going to now foreclose on you and demand full payment.
Everybody be cool, this is a robbery!
And that process is called due on sale. Now, it's very rare for a seller to even care about the due on sale clause, especially in a subject to transaction, but it's something you should bring up. I have had the due on sale clause called on me, guys, 4 times out of probably 700 subject to transactions. It does happen. Have I ever lost a house, or have I actually had a bank ever finalize the due on sale clause? That's the question. Yui Win, when you got the due on sale clause called on you, you called me when I was on the golf course. This was like almost 2 years ago. And Yui Win goes, Pace, I just got the due on sale clause called on me. I go, great, I'll call you after my round of golf. He's like, I can't wait. I go, yeah, you can. It's not that big of a deal.
No big whoop.
And Yui Win, looking back on the due on sale clause, how worried were you out of a 10, and how worried should you have been out of a 10? Yeah, he was a 10, and he then went to a 0 out of 10. It's very, very simple. So I called him, I put him in touch with the right person. They walked him through it, and he's like, oh my gosh, that was it. And guess what? Yui, do you still own that property? He still owns it. So guys, do we need to really worry about the due on sale clause? Maybe we should just go watch my Zooms dedicated to the due on sale clause. I've had the due on sale clause called on me multiple times. I think when people say, oh, due on sale clause doesn't exist, that means they haven't been doing subject to long enough. It's going to happen.
Right.
And nothing you can do will stop it. I get people that go, oh, well, buy it in a land trust and do this. I've done all of the strategies, and you still due on sale clause called on you 1 out of maybe 500 houses. Okay. That's kind of the number. What the due on sale clause is let's say that I take over Dave's house, right? So Dave has a Wells Fargo loan on this property. I decide I'm going to go open escrow. I'm going to transfer the deed from Dave's name to Pace's name, but the debt is going to stay in Dave's name. If the bank that Dave's name is on, Wells Fargo, if they see the deed has been transferred, but they didn't get their debt paid off, they have the ability to call the due on sale clause or the acceleration clause, where they go, hey, Dave sold the house to Pace, but
Yeah. We want our money.
never got paid.
Yeah.
Right? First and foremost, I'm going to be very blatant and honest here, right? No smoke and mirrors. Most of the time, the bank never notices it. And even when the bank notices it, they don't care. Okay. And I'll give you the instances, the times where I've had the due on sale clause called on me, how we overcome it, all that kind of stuff. The bank goes, oh, wow, they transferred ownership. Pace is now the owner, but Pace's name is nowhere on the debt. We want that paid off. Okay. Well, first and foremost, banks are way too big to care. And even when they do find out, they typically don't. Okay. So let's go to the ones that do care, right? The ones that do care, typically the thing that gets you screwed up on the subject to deal is if you are transferring insurance incorrectly, or if you stop making the payments, obviously they're going to call the due on sale clause, right? So there's a very simple way to overcome the due on sale clause. Okay. Either a lot of people don't know this, you can use, this might even blow you away, Chris. You might never maybe even heard of this. There are companies out there that will provide due on sale clause insurance.
Oh, wow. Like, look at that. Wow. There's a business for everything.
There is a business for everything. So the cost of due on sale clauses insurance is about 1% of the purchase price of the home. So let's say I bought a home for $400,000. There's a company out there that will charge you $4,000 to guarantee that even if the due on sale clause happens to you, they will fix it or they will refinance the house out with their own money. Okay. Now that's great, but that costs money. So a lot of people look at that and go, I don't want to do that. I've had the due on sale clause called on me 5 times. And I'll give you the most common thing is what happens is, let's say somebody's in foreclosure. Okay. Seller's in foreclosure. I come along and I go, hey, let me catch up your payments. And then I want to take over your mortgage and you can move away. Right. So we catch up the payments, we close escrow. I'm now the owner on a property that the debt stays in that seller's name. The seller's now off into the sunset doing his own thing. The bank goes to reinstate the loan in their computer and they go, oh my gosh, they caught up the payments. And then 3 days later, they transfer the ownership to this new guy. And then boom, they call this the due on sale clause because they were in the process of reinstating the loan. Okay.
Yeah.
Very common. So what we typically do is we catch up the payments and then we wait about 10 to 15 days after the loan is reinstated to then close escrow. And then you don't have that problem. But the times that we've made that mistake, I've gotten on the phone with the bank and we go, how would you guys suggest we do this? Now, Chris, this might get into a little bit of the weeds, but it also proves your point from earlier that you really do need people that know what they're doing here, which is why, leveraging my community or leveraging myself will help your community get these types of deals done. I go to the bank and I go, hey, bank, this is Johnson Bank, very small branch. I got a hold of the actual president of the bank, who is the son of the founder of the bank, right? That's how small of a bank this is. And I said, hey, you guys just sent us a letter saying you're calling the note due or calling you're telling me that I owe you the money because we transferred the ownership and that you're going to foreclose on us if we don't pay you. I just caught up this guy's payments. What do you suggest I do? I don't want to lose this money. And the bank says, why don't you, this is where it gets a little hairy, but I'll give you exactly what we did. The bank tells us, why don't you deed the property back to the owner? It'll stop the due on sale clause. And then why don't you just buy it on an agreement for sale? Okay. Agreement for sale is something not a lot of people have never heard of. It's also called a land contract, a contract for deed. Right. There's multiple names for it. And ultimately it's called an executory contract. And guys, I'm purposely not slowing down for you on this one because I want you to know there's a lot of terms that are challenging for a typical wholesaler to even understand this. Okay. So he says, why don't you just buy it back on an executory contract? So you're still the owner, but you don't transfer the deed. Therefore, you're not violating our policy. I go, amazing. So we deed the property back to the owner. We then write a contract called an agreement for sale in Arizona. And then I take that agreement for sale and I file it against the property at the county recorder's office. So for all intents and purposes, I am the owner. I just don't show a transfer of the deed.
Got it.
And that's how you get around the due on sale clause for anybody that is afraid of it. I've had the due on sale clause called on me 5 times. And all 5 times we've done something similar where we just rearrange the paperwork and we solve the problem. The main objective of this call, I think, is to discuss the due on sale clause and kind of how to get rid of that, how to eradicate that, or how to maybe avoid it altogether.
Yep. Yeah, I think from our side, it's just like weighing our risks. We've personally guaranteed the loan, like our homes, everything, are at stake. And so, Pace, I've seen your stuff online. So, you're a credible guy, to work with and obviously know what you're doing here, but it's more, kind of education on my part where I haven't done one of these before, like how do we protect ourselves, in that scenario, and everyone says, like it's rare that clause gets,
It does get called. I mean, I do tell people it is rare. It's 1 in about 500 transactions that we do. It does happen. And I always tell people, I go, plan on it happening 100% of the time so you do your paperwork properly and you protect the seller from having a problem. We currently have a due on sale clause that we're going through right now in Texas. They do happen. I probably get one once a year. So they do happen. And you worrying about it is absolutely an important thing. And if you ever have a buyer that says, don't worry about it, then definitely don't go through that buyer.
Yeah.
There's a couple of different ways to go about it. How much time do you guys have? Because I could talk up a storm if you guys want me to.
I've got plenty of time.
Okay, cool.
Yeah, do it. We want to learn this.
Okay, cool. So there's 2 ways to do this, all right? And both of these ways, my team has been the pioneer of doing them the proper way over the last 10 years. We even have attorneys from all over the country that come into my office usually once a quarter, and they'll come in all over the country to learn how we're doing it. We have, we've sat down with attorneys that helped write the Dodd-Frank Act. We have attorneys that used to audit for the IRS. We pay them to come in and make sure that we do things the proper way. And so we're the team that leads the industry in this regard. Even my students that learn how to do this, they have to go through a few transactions before they truly own the information, if that makes sense. It's just like framing a house. Like, I would never hire a guy that framed a house one time. I'd be like, I'm glad that you did it one time, but let's wait until you framed a house 3 or 4 times before I hire you to frame my family's house, right? We know this better than anybody else. So that's why I say, how much time do you have? Because I love talking about it. But there's 2 ways to go about doing it. First way to go about doing it is where most of your worry is going to come from. And that transaction is going to be a SubTo deal. Okay, which means the deed transfers into my name and the mortgage stays in your name, and I just pay all my payments to a servicing company. We use a company called Westar, and Westar pulls the money out of my account. Westar then dumps the money and pays the principal, the interest, the taxes, the insurance, and then the 5th payment they make is to your seller equity portion of the deal. So they make 5 payments on my behalf. They charge me $27 a month to do that, so I'm never actually paying you directly. Westar pulls the money out of my account, distributes the money. I know some of this you probably don't need to hear, but it leads up to my actual point. So Westar sends us out monthly reports. They're the ones that are updating the taxes, they're updating the insurance. That's what they do for a business. So I don't have to track those things. I just pay them to track it, and I get a monthly report, and so do you as the seller. You get a monthly report on where we are in terms of the amortization schedule, et cetera. Now, we update the information on, where does the bank communicate? So the bank would then communicate with my team. We would get the letters, we would get the notifications, we'd get all of those things so that you wouldn't be bothered with them. And plus, we're managing the asset. We own the asset in that situation, and we want all the information. In that scenario, there is a likelihood or possibility of the due on sale clause getting called. Now, why does the due on sale clause get called? It gets called for a variety of different reasons, but typically it gets called because somebody doesn't make the payment. And that's never been why I've had it called, but sometimes a buyer in a SubTo transaction will forget to make the payment because they're too cheap to hire Westar and pay them $27 a month. And they're basically managing that business like a mom and pop business. So they go, I don't want to spend the $27 a month because I'm a cheapskate and I'm going to just manage the payments myself. They're late. The bank then notices they're late, sends them out a notice. They go, wait, hold on a second. The deed has transferred. What the heck is going on? And so they send that letter. So that is number 1 reason why this happens. Never happened to me, but that is the number 1 thing I happen to see in the industry. People being cheap and not hiring a servicing company. Number 2, insurance transference. So when you have insurance on the property, you will, when we close escrow on the deal, you will keep your policy in place. And about a week before we close escrow, I get a secondary policy in my name with you as a loss payee, as an additional loss payee. Okay, so the insurance would now primarily be in my name, and that's a second policy I have on the property. I do this prior to close so that just in case, because I've had sellers do weird things. A seller will call their insurance company and go, I'm canceling the insurance policy. I don't own the property anymore. And then we don't have an insurance policy. So we always do it about a week before we close escrow. I get a new policy. And a lot of times I'll go through your exact insurance agent. I'll call them up and go, hey, I need to get a second policy because we're going to now manage this property. We're going to take it over. About 30 days after we close escrow, the dust is settled on the deed transfer. We then have our insurance broker call the bank and say, hey, we're changing out our insurance provider. I want to just make sure you know this. And Pace's company is now managing the asset, so you'll see them on the insurance, and then you'll see the seller still as a loss payee. If it's not done properly, then this insurance can trigger the due on sale clause very easily as well. Okay. Outside of those two things, the only time I've ever seen a due on sale clause get called is because the bank is so absolutely small that they actually pay attention to those types of things. And I have had that called on me. There's a bank that had 6 branches, and the president of the bank manually had all the foreclosure files sit on his desk in a manila, like a stack of manila folders. And he manually entered and, put them back into good standing every Friday. He'd go through the whole stack himself manually. So it's just a really small bank. So the due on sale clause is a thing, and it's an issue, and it could pop up, okay? What typically happens is they send you a letter, okay? And it's a letter that says, we are not calling the due on sale clause on you. We are giving you 35 days to deed the property back to the previous owner and get rid of this problem that we are seeing. Why do they not just issue the due on sale clause, and why don't they just come after the asset? Well, first and foremost, we know the most important thing on planet Earth as a real estate investor is to actually not be a real estate investor. Do you really, as Mr. Seller, and even me, the buyer on this deal, do we really want to own real estate? The answer is, at the end of the day, no. If I could make passive income without owning the asset, that's actually what I'd rather do. And what do we call that? We call that banking. So the bank has already hit the top of the totem pole. They are the top of the totem pole. They are lending money on an asset they don't have to manage, they don't have to deal with, they don't have to know the tenants' names, etc. They don't want that asset back. Therefore, they don't call the due on sale clause. It's not their business model. Another big reason why they don't typically just go after the due on sale clause immediately is because their Moody rating, right? So they their bank gets a credit rating, and if they're foreclosing on properties, which is what they have to do in order to take the property back through a due on sale clause, a due on sale clause is actually a judicial foreclosure. So it costs the bank usually between $30,000 and $50,000. They have to take you through a foreclosure to take the home back or the asset back through a due on sale clause. No bank is motivated to do that because it messes up their credit rating, and then it causes them to have issues with their warehouse lines in the future. They won't be able to get warehouse lines if they get a lot of foreclosure. So it's not typically bank policy for them to even care about the due on sale clause. What they care about on the due on sale clause is if somebody, again, is late on a payment, that's a problem. And if somebody doesn't have insurance set up properly on the asset is also a significant problem. Therefore, that's typically where the due on sale clause comes from. Most of the banks are aware when I'm buying a property subject to. But if I'm doing it properly, they don't care. In fact, they're like, just keep making the payments. We don't care, right? So we get a lot of sellers. Like I have 2 RV parks right now in Montana that I'm buying. And I have sellers that just have a lower threshold in terms of risk tolerance. They go, okay, Pace, I got it. The bank doesn't want the property back. I get that you know how to do this the right way. I understand that you're the foremost guy on due on sale clause and but what if? What if we do get the due on sale clause? By the way, I'm still on scenario number 1. I'm going to go to scenario number 2 here in a little bit. So in scenario number 1, if I do get the due on sale clause, which again, I've seen it happen 10 times and 7 of those times are me, 3 of those times have been students of mine that I've helped overcome the due on sale clause. The way that we do this is I deed the property back to you, the seller, and I repurchase the property on one of 2 different scenarios. And that then goes into scenario number 2, which I'll go into now. I then reset it up as either a lease purchase, where I'm now leasing the property and the lease payments go towards the mortgage and the lease payment goes towards the equity, etc. And the option to buy is whatever the remaining balance is at the day that I execute that option, whether I sell, I refinance, or I pay it off, whatever the execution exercise is. Or I purchase it on what is called, and this is where you're gonna wanna take some notes. This is where most people don't learn this in real estate school. Most people have to go to a real estate attorney to learn this, and that it's legal in all 50 states, and it's being done hundreds of times in every single state. It's just very specific title companies and very specific closing attorneys know how to do this. It's called an executory contract. And an executory contract, for example, you're a Utah boy, so I assume that the answer to this question is yes, but I gotta ask. Have you ever purchased a vehicle with cash from a seller or sold a vehicle for cash to a seller in Utah?
Yes.
Okay, and what do? Let's say that I'm buying that vehicle from that seller. Have you ever bought one from a seller?
Yeah.
Okay, cool. So my first car, I lived in Pleasant Grove, Utah. My first car was $500. It was a Ford Escort. Man, I got that money from bagging freaking groceries at Smith's grocery store. I was so happy about that. And I was amazed by the fact that when the seller of that Ford Escort signed that car over to me, I didn't have to sign anything on that title. The seller signed the title, had it notarized, and passed the title over to me. I now hold that document, right? I now hold that document in my hand. So who is the owner of that Escort, even though I have not recorded that document at the MVD at that moment? Who is the owner? The truth is that I am, right? I control that document. Even though that document has not been recorded at the MVD, at public record, I legally control the most important document in that transaction. And that is what we call an executory contract. That is mostly how cars are bought and sold. And that is how you can convert the transaction into a number two transaction, which is I can have you, Mr. Seller, deed the property to me at close of escrow. But instead of us recording that deed at the county recorder's office, which is where the due on sale clause is actually triggered, we take that deed and we put it in a safety deposit box at Chase, Bank of America, Zions Bank, or whatever. And it sits there at the bank where I have access to it, you have access to it, as long as one or the other party signs off on it. You can set this up 100 different ways. But the way we do it, and the way I'm doing it with that RV park, is the seller, his risk tolerance is just really low. He's been screwed over by a lot of people, both business partners, family members, tenants. He just is like, dude, I have had so many people screw me over. I go, great. Why don't we set it up where we have the deed sit at the safety deposit box so that when I sell the property, when I refinance the property, or when I pay you off, the deed is there and I don't have to worry about chasing you down for the deed. Are you okay with that? And he goes, yeah, as long as you can't just go and pull the deed out. And I go, yeah, you would have to sign off on it. And same thing for me is I would have to sign off for you to take the deed out of the safety deposit box. He's like, yeah, I'm cool with that. But that's a negotiation, right? That you and I would have to figure out. Some sellers just go, take the deed, I don't care. Put it under your mattress, I don't care. But usually the larger the asset, the more risk there is. And so you've really got to kind of work that out. But the way to completely annihilate and remove and mitigate, not even mitigate, completely remove the risk of the due on sale clause is you can do what we call an executory contract. The executory contract, one of the reasons why we don't do it first and foremost as option number one, because it seems like, well, Pace, why wouldn't you just do the executory contract as option one instead of doing sub two? Well, there's a couple of reasons why. If I have a seller willing to do sub two with me, I just have more control. And I'll just be honest with you. As the buyer, I don't want to chase the seller down in 7 years and go, are you still alive? Are you and your wife in a marital dispute? Are you maybe on a mission for your church and I can't get a hold of you because you're in Ukraine or something? Like literally, these are real things that pop up, right? So I don't want to deal with that 7 years down the road or 5 or 3 years down the road. So I prefer as the buyer, the credible buyer, to have full control from day one. Now, as the seller, I could see the seller going, well, I don't know that you're credible and I don't want to release the deed to you. So if everything else is the same except for the control of the deed, I would rather go through the executory contract because I don't know you from Adam and I don't even want the risk of the due on sale clause popping up. In an executory contract, there is literally zero risk of the due on sale clause popping up because the due on sale clause is triggered when I take this document and I record it at the county recorder's office through my title company. And now the bank can see that that transference has actually happened. If, for example, this is a really good example for me. When I bought my Escort, I bought that car. And when I went on my mission a couple years later and I went to sell the car and I go, oh crap, where's my title? And my mom goes, did you ever even get a title on that? And I go, yeah, I got the title. And I go in, I didn't find the title. I found the document where the seller sold it to me, but I never recorded it and got the title in my name. And I go, oh my gosh, I never owned the car. And my dad actually had to come and tell me because my dad had been doing sub-2 and seller finance transactions prior to all of this. And my dad goes, no, you control the document, which means you are the owner of the asset. I go, so what do? Do I go down to the MVD and record it? Now I'm the owner, now I can sell it? And my dad goes, no. The previous seller already signed off on the transference, just hand the new buyer the document. And I'm like, so my name never had to be on it one time? He goes, no, you had control of it. I'm like, oh my gosh, I can do this. And real estate was an amazing revelation for me. And this is something in Utah, it's called a land contract, or some people call it a contract for deed. You might have heard those things. In Arizona, we call it an agreement for sale. In other states like Pennsylvania, they call it a bond for deed. There's different names for it in every state, but the high level overarching umbrella term for it is an executory contract. So you've probably heard contract for deed or land contract before, correct? So that's what it is. And it doesn't mitigate, which means lessen. It removes the risk of the due on sale clause. It still gives me, the buyer, comfort knowing that you've already signed off on the deed. We just haven't transferred it and it just sits in a safety deposit box. But then it gives you, the seller, control knowing, okay, well, what if Pace gets abducted by an alien? Which, unlikely, but weirder things are happening, right? What if I get abducted by an alien and nobody makes the payments to you or the bank? You probably, as the seller, want to go, yeah, give me that asset back. I don't want to have to foreclose on you. I don't want to have to go through this whole entire process to get this property back. All you would have to do is go back to the safety deposit box, and based on our agreement that says if I'm ever late, if I ever commit a foul or breach contract the way that we set it up, which, I would pay for an attorney to set it up, and then you could have somebody review it, whatever. You would then go, okay, well, you've breached contract, dude. I'm giving you 3-day notice. You have 3 days to clean up this breach. And if I don't clean up my breach, you go down to the safety deposit box, you pull it out, and you get the deed back, and it's your property again. So down payments that I gave you, any commissions I paid to the broker, closing costs, any improvements I've made on the property, all the payments I've made towards your seller equity, all the payments I made towards your bank note, all of that you keep, and you get the property back immediately. So it does give you a lot of power and it gives you a lot of control. An executory contract gives both parties kind of the balance there, as long as the release of the deed is worked out really, really cleanly. Here's what happens with me as a buyer, right? As an educator, I educate really, really well. And so what happens is people will come and get educated from me. And then they'll go and shop my offer, they'll shop my LOI, and then what will end up happening is in a week, somebody will call me and go, hey, I've got an 18 units in Ogden. I see every deal. I see them all. And the majority of buyers are not actually buyers. The majority of buyers are wholesalers in today's market, right? People are hurting. And so whoever the buyer ends up being, a couple of suggestions. Hopefully it's me, but I can't guarantee that. And you guys are businessmen, so you want to keep your cards as close to your vest as possible. I would suggest a couple of things. Number one, make sure that you require the entity that signs the document to close escrow on the deal. So whatever's on the purchase, and I don't know what entity we're going to end up buying in, but whatever entity we end up buying in, make sure that that entity is who signs and closes the transaction. Also, make sure that the proof of funds does not come from a hard money lender, because you'll run into this a lot with wholesalers. You'll say, can we get a proof of funds? And the funny thing is, I give people for proof of funds for a lot of fix and flip stuff and whatnot, but you're not looking for a proof of funds for a fix and flip, which is okay to come from a hard money lender. You want your buyer to actually have the cash sitting in their actual bank account in the entity that they are closing in. And so what'll happen is sellers will call me a month later and they go, hey, we're just circling back around. In fact, our Tucson property, the one we just closed on, 160 units, $20 million. This is exactly what happened. Sellers and their broker come to me. They get educated on the process. I go, you're probably going to shop me. They go, no, we're not going to shop you. I'm like, bull crap, you're not going to shop me. You're going to shop me. That's what the business is. You're going to shop me. I know the business. You know the business. But for some reason, we just can't. You can't admit it. But they go and shop me, even though they say they won't. We actually have a signed LOI. So in the commercial world, an LOI is basically a contract, right? It's not, but it basically is. In single family, we don't do LOIs. We just do purchase contracts. But in commercial, you do an LOI. So we had agreed upon LOI. All of a sudden, the broker starts ghosting me. I'm like, oh, dude. So I sent him a text. And I said, man, you're embarrassed to just tell me you're shopping me around. So I'm going to tell you, you have my permission to shop me around. Just make sure that you do these things. And if they can't do those things, then I'm here still to be your buyer. And so the broker's like, thank you, was his only reply was thank you. He still didn't want to admit he was shopping me. So he just said, thank you. So about a month later, they come back to us and they go, hey, we had a higher offer. Somebody gave us a higher offer. And I go, where did it fall apart? And he goes like, dude, how much time do you have? They were trying to close in a different entity, which means they were just trying to wholesale it. Then they had another buyer that gave them a hard money lender's proof of fund. I'm like, so they're going to close on a $20 million asset with a hard money lender as their down payment? Like, that's what you want as a buyer? Somebody who's borrowing money for their down payment? Anyway, they went through the litany of stuff. So I would say you can't wholesale it. I would put in there, they specifically cannot wholesale the transaction. They also cannot double close the transaction. Because what does a wholesaler do when they can't wholesale? they double close. They'll close at a title company. The title company won't tell you, the seller, that they closed, and then immediately double closed to the next buyer, essentially transferring all of the terms that you, the seller, if you do not have a relationship as the seller, you are the bank. You don't have a relationship with the buyer. If they wholesale it or they double close, you don't even know who that person is. And now you're receiving payments and somebody's managing an asset that you don't know if they have the ability and the wherewithal to actually handle that asset. I'm speaking common language to you guys, and you already know this stuff. A big one as well, make sure that their earnest money is a significant earnest money. What's the purchase price on this? What was the LOI's purchase price?
3.7.
Okay, so I wouldn't be asking for, $5,000 down. I wouldn't be asking for 10,000. I would probably be asking for, I don't know, probably 1% of the purchase price minimum, $36,000. Ask for something so significant that you're like, if this buyer screws around on me and messes around with me and tries to renegotiate with me, because that's the other thing a lot of buyers will do. They'll get you into contract because now guess what you have? You have invested time and energy, and now there's an emotional thing. You get 20 days into the escrow and they come back and renegotiate with you after you've put not just 20 days of time and energy into it, but you've also told all the other prospective buyers to take a hike, and you've made yourself look like an idiot. Because now when you go and chase back those buyers who maybe were credible, you wasted 20 days. The wholesale buyers know this. And so what they do is and I teach wholesale. I wholesale from time to time when I don't want a deal. So I'm okay with wholesaling, but if you are seller financing a deal at this significant of a purchase price, make sure that the buyer that contracts with you is closing in the entity that they signed on. It is required that you cannot wholesale it. They cannot double close. They have to show a proof of funds from their bank account that is also the bank account that is closing escrow on the deal. Or like, for example, I'll buy in an LLC called Moving Forward Ventures. And then I have a company of my own named Creative Funding where I fund my down payments from myself to myself. It's a tax thing. My name's on both those LLCs, nobody else. So in the very least, even if the money comes from a different LLC, verify that it's actually coming from that buyer rather than some outside person that's not the person that you're doing business with. So, you've been in the business, you don't need me to tell you all of these things, but just as the seller, I would forewarn you. A lot of times, I'd say 10% of the deals I buy are deals that fall apart because the seller financed them to somebody who was not either A, one of my students, or B, somebody that didn't know what the heck they were doing at all. Like they just didn't know. And so they come to me and they go, hey, I saw you online. Would you be willing to buy the deal? And I go, you have to foreclose on that person first, who is not operating. Take the property back through a judicial foreclosure because the paperwork was set up in their favor, not yours, or at least middle ground. And then you can sell the property to me. And then the sellers will say something like, well, will you call them and see if you can buy the property from them? And a lot of times I will. I'll call the buyer and I'll say, hey, my name's Pace. And they go, oh yeah, I watched you on your YouTube channel. That's how I learned how to do this. I'm like, you did it all wrong, bro. And by the way, you're not managing the asset. You're paying the seller late. The seller is upset. You need to offload this to an appropriate operator who knows how to handle tenants and basically has a war chest of cash to overcome these things. And they go, well, yeah, dude, I'm new and I'm just figuring this stuff out. I'm selling a car next week that I can, come up with that money to pay the seller. I'm like, oh my gosh. Sell the deal to me. I'll pay you $10,000 to walk away. And I'll fix all the paperwork and you can leave. And they go, oh, dude, you don't know what that would mean to me if you could just get me out of this deal. So a lot of buyers they get in over their head. So anyway, there's my advice. Take it for whatever it's worth. Hopefully it's been helpful.
Oh, it's valuable.
Yeah, we'll take another look. I just need to kind of run this by my partners and see how how it shakes out for us. But yeah, we'll get back to you.
Okay, sounds good, guys. Appreciate you. Hey guys, I'm the due on sale clause. Okay, no, I'm not. This is freaking horrible. Let me change. This is horrible. All right, guys, let's get serious because this topic is a very serious topic. We're going to be talking about the due on sale clause today, and here's what we're going to be going over. We're going to be going over why are you so worried? Where does that worry come from? Should you be worried? The answer is yes. Short answer is yes. You should be worried about the due on sale clause. What is the due on sale clause and the acceleration clause? What is the process? How does it actually work? Do you just lose the house immediately? The answer is no. We'll talk about that. How do you fix it? We'll talk about that a little bit. And has it happened to me? The very short answer is yes. I've had the due on sale clause called on me 10 times. I'm currently dealing with a due on sale clause right now. They do happen. And I'm gonna tell you at the very top of this is that the level of worry you should have is level 10. Let's draw a little spectrum here. 0 to 10. If this is you, you should have a level 10 worry about the due on sale clause. Why? Because you don't know anything about it. If you don't know how to set up your paperwork properly and you don't know how to overcome it, then I would worry about it as a level 10. This is what we say on my team. We say, good. Another story to tell people about how we got another due on sale clause. It happens probably 1 in 500 transactions. It does happen. But I say good because we know how to handle it. My team, and when I say my team, this is what my team looks like. We've got Molly. Molly is my head of operations, so she's my ops manager or head of operations. Allison is our head TC. And then we've got amazing women. We've got Alyssa. We've got Heidi. We've got Hannah. We've got Shelly. Oh my gosh, Shelly's so great. Shelly started out not knowing anything about being a TC, and she's one of the best people I've ever seen as a TC. Kelly Humbarger. She's killing it, doing a great job. And we've got Jade. Jade Jarvis focuses primarily on the Gator strategy stuff, but look how many transaction coordinators I have. Hannah is also our notary. 1, 2, 3, 4, 5, 6, 7 full-time transaction coordinators. So that should tell you how many deals that we're doing. We do a lot of single family transactions. Our collective portfolio has somewhere around 2,100 doors in it. That's a mix between single family properties and multifamily properties. Anytime you're talking about the due on sale clause, you are talking about SubTo. You're not talking about seller finance usually. Sometimes you will run into seller finance due on sale clause, but that's very rare. Let's say that a seller who owns a house decides they're going to sell the house to you on seller finance. So you make monthly payments to them and you have an agreement with them. Let's just signify that with an A. They have an agreement called a promissory note and a deed of trust, right? That's the agreements between two parties on a seller finance transaction. And in this agreement, 99% of the time, it does not even have a due on sale clause in the agreement. Very savvy sellers will say, I don't want you seller financing that to the next person. Right? So now I could technically take that agreement and I could do what is called a wrap. If you guys want to know what a wrap is, go type in paste Morby wrap or go down in the description down below. I could 99% of the time sell it also to somebody on seller finance so they make a monthly payment to me. By the way, this is happening thousands of times a month. Sellers that are very savvy, the 1%, they will put in your agreement that they want the due on sale clause in there as well. I also have gone through the due on sale clause 10 times. And then I have students that have gone through the due on sale clause probably closer to 100 times. So we are pretty savvy when it comes to what it is, what the process is, how to handle it, and how to overcome it for the students inside the SubTo community. So, oh man. I have an attorney that's doing all my paperwork, and Sean is constantly going and doing continued education, and he's learning from other attorneys as well. So I don't need to worry about my paperwork and my process because I have the #1 attorney in the nation. So if you're an attorney watching this with me and you want to make a criticism, go ahead. We know more than you do. Eileen Brown, 51 years in escrow, primarily around creative finance. This is the woman that taught me creative finance. And I talk about this in Wealth Without Cash, and we can get this on Amazon. Chapter 1 is all dedicated to Eileen Brown changing my life and helping me out with creative finance when I first got started in the business. And then Molly, who is my head of operations, who does all the, I don't do any of the paperwork. Let's jump into what the due on sale clause is. What is the due on sale clause? The due on sale clause happens when, let's say a seller, every deal starts with a seller, right? So here's the seller. Seller says, all right, I'm ready to move, but I have a lack of equity. I'm gonna get an agent involved. Now, I'm not a licensed agent, nor would I ever be a licensed agent. This is a high-paid job. I don't want a high-paid job. I think this is great. I used to have a high-paid job, but I upgraded past that. Now I'm a business owner. I'm an investor. And I hope that all real estate agents at some point become investors. But as of right now, this agent is the agent that takes commissions to sell the seller's house. Sellers hire agents because they don't know what else to do. So the agent goes and puts this house on the real estate market. Okay, let's call it the MLS, multiple listing service. This is where real estate agents only are allowed to list properties, and then the buyers have another agent on the other side. So the buyers come along and they tell the agent, hey, we want X, Y, and Z in a house. Please go find that for us. The agent goes on the MLS and they go through, and this is how business is done. Agents are looking for deals, agents are trying to sell deals, and hopefully there's a match there. So what ends up happening is this agent will have this house on the market for 100 days, maybe 120 days, maybe 130 days. By the way, guys, days on market are climbing. The market is soft right now. A real estate investor like me, let's say Pace comes along and calls that agent and says, hey agent, I see that the house has been on the market for 100, 120, 130 days. Would your seller be okay just letting me take over their payments via subject to, just buying the property subject to? So Pace calls the agent is puzzled. Agent says, I don't know what subject to is and how that could help my seller. Okay, well, let me give you a video. I'm gonna give you a really great video. I'm gonna give you a private Zoom that I did with a seller. I spent an hour and 15 minutes with a real estate agent who was saying, I don't know what subject to is and I don't know how it could benefit my seller. I'll give you that Zoom. It's a recording of a Zoom. Truly, 99% of the time, these agents just don't know what they're doing. So the process is, Pace calls the agent. The agent's puzzled about creative finance. I then have to coach the agent, and the agent then goes back to the seller. They screw up the description, they screw up the thing. The seller probably says no a lot of times, not because I didn't do a good job, but because the agent's afraid of letting me talk to the seller direct. So the agent goes 140 days, 160 days, and then goes, oh my gosh, you know what we need to do is we need to go back to Pace Morby and we need to say, hey, is that sub-2 offer still on the table? Because I'm about to lose my listing. It's amazing what will happen when an agent is about to lose their listing and lose their commissions. Agent goes back to the seller. Then the seller says, well, why don't we just talk to Pace directly? And finally, we all get on this magical thing called Zoom where all three of us can communicate and I can talk to the seller directly. This is another really great one. I'm gonna give you a Zoom where one of my students brought me in to re-explain what subject to and all these legalities are to an agent and to the seller directly. That will be in the description below. I'm just gonna give you some of the greatest gifts of all time. This video is gonna be a really great gift to you. I'm telling you, it's worth this video by itself is worth $10,000, $20,000 just by itself. It's unbelievable. Agents don't know much about real estate. They know how to put a sign in the yard and collect offers and mitigate risk and stuff like that, but they don't know a lot about valuing properties and really providing solutions to sellers beyond just listing the house. So the seller finally says yes, okay? Yes, I'll let him take over my mortgage subject to. Okay, perfect. So what do? We enter into a purchase and sell agreement. By the way, yes, it is a sub-2 purchase agreement with sub-2 addendums, and there's about 19 disclosures that we put into this. So the seller knows exactly what is happening, meaning one of those disclosures will say, you have a continued liability. There is a possibility that the due on sale clause does happen in this transaction. And furthermore, here's what we will do about it when it does happen. Let's plan for it to happen so we're not surprised by it happening. We then do what? Who do we go hire, Eric? How do I get the transaction done? Who do I go hire? Okay, I hire a TC, yep, but the TC was probably already involved since I got the agreement already signed. Who do I then hire? Escrow, there you go, love that, great answer. So the escrow company, right? Or the closing attorney. The seller, the agent, and Pace enter into this awesome agreement. We take that agreement, we send it to escrow. Now escrow is just a fancy word for the beginning and the end of a transaction. So when somebody says open escrow, that means start a transaction. Close escrow means close a transaction. So it's kind of like this person is the cashier at a grocery store, right? When you put your groceries on the conveyor belt and you start checking out, that's opening escrow. When you're down here punching in the thing and entering your credit card, getting your receipt, getting your groceries, that's closing escrow. That's what escrow is. You now know what escrow is. Congratulations. I bet you your broker, if you're a real estate agent, your broker probably never explained it to you in that simple of terms. You probably still didn't understand what escrow was until this moment. If you just learned what escrow was, make a comment down below. We open escrow, we take that agreement, we tell the escrow officer, hey, we're buying this property subject to. They go, no problem. It's a very simple process. Sub-2 has 7 less people involved than a regular cash transaction. Is that even possible? Yeah, a lot of times we just don't have an appraiser, we don't have an inspector, we don't have lenders, we don't have all of these things. None of those people are involved in a sub-2 transaction, so it's a very easy transaction. Now, what's happening? Well, what's happening is the seller has a deed, that's the ownership, and the escrow officer is taking that deed and they are transferring it into my name. But the one thing that they are not doing is they are not paying off the seller's loan. That is where the due on sale clause comes in, is that the bank over here, the big fancy, let's make a big bank with all these windows. They got lots of glass. Look at that big glass. That also looks like a very evil monster. So here, these are windows, but I'm gonna make it look like a monster, okay? So this is the bank. The bank finds out, let's say 6 days, 6 months, 6 years later, the bank finds out that the seller transferred the deed through escrow to me, and I am now the owner. By the way, how do we know who the owner of real estate is? Is the person who controls the deed. The person who controls the deed is the owner. Deed is who owns the real estate, and title is how they own the real estate. So when somebody says, oh, I took title, it's not really how you should be saying it. You say, I took the deed, I have the ownership, I have the deed, I have the note is in my name, I am the deed holder, I am the owner of this property. Title is how I own it. So this is how you would do it. So Pace Morby owns this property through an LLC or tenants in common or whatever else. Title is how you are holding that property. Deed is who. The deed has been transferred into my name. Pretty simple. It's a one-page document. Takes $17, and the escrow officer does all of that. And then guess what we always get 100% of the time? We always get title insurance. If you ever run into somebody that tells you don't get title insurance on a SubTo transaction, I'm telling you right now, I've had multiple attorneys tell my students, no, you don't need title insurance. That's lazy and irresponsible. You should get title insurance on every transaction. Every transaction. I'm going to say that again. Every transaction. The bank finds out that the loan has not been paid off. If you were the agent or the broker that was worried about the due on sale clause, you now understand what is going on. The bank sends a letter. They send a letter to me. Here's what the letter does, is the lender gives me 35 days to remedy the problem. What's the problem? The problem is the deed is no longer in the seller's name. The deed is in my name, but we did not pay off the loan. People will say, how is this possible? Here's a house. If the seller owns the house, there's 2 documents that govern this house. One of them is the debt, and one of them is the ownership. Okay, and the ownership, what do we call that? That's the deed, right? The debt would be the mortgage. The mortgage and the ownership have nothing to do with each other. Uneducated people, they think that the bank owns the house. Guys, the bank does not own the house. The bank does not own the house. Do you have your phone? Where's your credit card? You got a credit card? How much money you got? I'm gonna pull out Eric's Freedom Card. Is this a credit card? Mm-hmm. That's a credit card. Mm-hmm. Okay, so if you use this money, whose money is that?
Not mine.
It's not your money. If you decide you want to go buy this with that money, who owns this?
I do.
You're telling me that Chase owns my Sambazon drink? Is that logical? Is that logical? It's not logical. This seller can transfer the deed over to Pace for a measly $17 at the county recorder's office. And I am now the owner of that property. I have the deed in my name. It's simple. It's that simple. Now, I've given you a big old long history on the due on sale clause. I've given you a lot of stuff. Hopefully you understand some key elements. First and foremost, the bank does not own the house. The bank does not own my Sambazon. Okay, I have borrowed money to buy a thing that I own, and I simply just pay the debt back. That's it. It's an agreement, but this is mine. Do me a favor, write this in the comments. The receipt of real estate is the deed. You know what I do when they say sign? How do you sign your name? Do you sign your name like actually legit?
I try to.
I'll do stuff like this. I'll go, boom. Or I'll do a swoosh. I'll go like this, like I'm doing a Nike swoosh. I don't care. Nobody cares. Nobody's checking your signature at the grocery store. It's a complete lie. You can scribble. I have my daughter sometimes do this. Nobody cares whose money you're using to buy the groceries. All they care about is, are you going to pay it back? And so that's the same thing with real estate. The bank doesn't care if you buy the house subject to. They just care that it's being paid back and it was set up properly. So you deeded the property to Pace Morby subject to. The bank is upset by that. So what do? They send you a letter, and it's a demand letter. Okay? The demand letter does not give you a fine, does not threaten you, does not hurt the seller's credit, does not hurt you. It doesn't do anything except make you aware that the bank is now aware that this has happened. This typically will happen within like 30 days of a SubTo deal happening because somebody did the paperwork wrong. They did the paperwork wrong. This is why having a top tier TC like Molly is important, and an escrow officer that knows how to do this and a closing attorney that knows how to do this is really important. It takes you from the spectrum, right? We talked about that spectrum, the 0 to 10 spectrum. If you don't know what you're doing and you're just lying to yourself, you should be here. You absolutely should worry. If you have a dream team like me, I have literally 0 worry. In fact, my team says what when we get the due on sale clause? Good. We got another story to tell, how we overcame the due on sale clause. Good. If you are one of my SubTo students, I want you to go into the vault. Okay, the vault is subtocourse.com, and inside the vault, we have 10 plus Zooms inside that vault that every time we have a due on sale clause happen, we do a Zoom called PACE studies, not case studies, but PACE studies. We show you the address, we show you the demand letter, we show you the step by step, the workflow of how to overcome a due on sale clause. What's the process? Here's the process. The bank, this big bad bank, right? Now I got to draw this bank again because I erased it like an idiot. That one looked better or worse than the other? The other one looked better, didn't it? Okay, so the bank sends you a letter, and this letter is a 35-day demand letter. You're going to call the bank. The buyer, okay, not the seller, but the buyer, PACE. Somebody on my team will call the bank and let them know, hey, we bought the property subject to, letting you know, hey, we're making the payments, what's the problem? I'd say 90% of the time or more. The bank will say, oh, great, we just didn't know what happened, perfectly fine, just cool. Who's the servicing company? And they get synced up. 2, if that does not work, which that does happen, we'll actually have to go through and we'll do one of multiple options. We'll do an executory contract, okay, or we'll do a lease option, land lease, okay, something along those lines to unravel and redo the transaction in a different type of format. What about a land trust? We still have the risk of getting the due on sale clause called on us in a land trust. We've had a dozen students who have done land trusts in buying property subject to and still had the due on sale clause called. So I still run the risk of getting the due on sale clause called on me, but why? I have multiple videos on YouTube channel about what an executory contract is and multiple videos about the lease option. And we also have other videos on the channel about what an executory contract does in order to overcome the due on sale clause. Why am I doing a land trust if these are the better options? In the state of Texas, okay, the state of Texas, you're the only state that is really hard to do an executory contract or lease option. All other 49 states, executory contracts and lease options are easy. It's common. Even though I'm doing a land trust, I still run a very small risk of getting the due on sale clause called on me again. And if I go that route, then if I get the due on sale clause called on me a second time, which we've had that happen as well, in all other 49 states, I will go this route. In Montana, it's a land contract. Okay, that's what an executory contract is called in Montana. I'm doing a land contract right now on an RV park because the seller is worried about the due on sale clause. So if you are a seller and you're really worried about the due on sale clause, then ask your buyer to just do an executory contract from the beginning. Okay. Now here's the problem with the executory contract. You think brokers and agents don't know anything about SubTo and seller finance? You're right. Guess what? They're going to know very, very, very little about executory contracts, even though if these brokers and agents are honest with themselves, they have this thing called CE classes. And they're all going to cringe when I say this, but they have required continued education classes that actually teach executory contracts in all 50 states. And still brokers and agents, you know what brokers and agents do? They hire their cousin, their brother, or somebody else to take their continued education class. I've sat there and watched them. They just click through the classes and they skip everything. They're not learning anything in those continued education classes. So even though it is legal and agents are taught this in continued education every 24 months, they still won't know. But if you're a seller worried about the due on sale clause, then I would ask your buyer to just do an executory contract because it gets rid of the due on sale clause altogether. In fact, a land trust is the last thing that last resort I would ever go to. And the reason I'm doing it is because it's in Texas. Hopefully that makes sense. Now, I've given you a house. I've given you what these things are. And I've also told you that I have had due on sale clause called on me and I've never lost a house. I've never had a seller ever get their credit damaged. I've never had a seller get in trouble from the bank. I've never had a seller have a problem whatsoever with any of this stuff. My sellers are friends of mine. They send me Thanksgiving things. They send me Christmas cards. My sellers become my friends. We don't have problems with our sellers and how we run our business, okay? Now, here's a couple of gifts I'm gonna give you. I did an agent class a couple of months ago where I had 50 real estate agents come in and learn creative finance for 4 hours with me. Sean, Eileen, and Molly and myself taught for about 4, maybe 5 hours. We fed those agents, had them come into my office, and I want to give you that. That's in the description. How much is that going to cost them, Eric? $3. Here's the thing, if you're a student, we have way more education on exactly how to do this. Slower, Q&A. Hey, Pace, I've got this house. How do I overcome this? Molly actually does the paperwork live. Amazing stuff. So if you're a SubTo student, go into the vault. Remember, I have those 2 agent calls. I have 1 call with an agent that the agent just was curious, what is creative finance? And I'll give you that Zoom in the description below. I'm just giving you all sorts of gifts today. Then I've got another call with an agent plus a seller who thought my student was being sketchy. And I went in and actually overcame this on a Zoom as well on a Hawaii SubTo deal. When somebody comes to me in my DMs, typically what I tell them is I say the due on sale clause is a joke. I've done 7 videos on my YouTube channel. I've given explanations. Go ask my students. So if you want to go ask my students and do deals with my students, where should I go to find Pace's students? Free Creative Finance Facebook group. We have, as of today, I think we have about 140,000 members. And 20,000 of those members are actual trained students of mine. Those 20,000 students help the other 120,000 students get deals done, raise money, all of those types of things. If you heard somebody that's lost a house, it wasn't one of my students. A due on sale clause is from people that don't know what they're doing, have bad attorneys, have bad agents, and have bad education. Okay, my students are here. They're not worried about the due on sale clause because they know they can go into my vault. They want to go into my live training. Come here, let me show you something kind of cool. You see all these green blocks right here? These green blocks are all of the live Zooms I do on a weekly basis. 39 live Zooms about every topic that you can imagine, 2-hour deep dive on everything, every single week for 39 Zooms. Super helpful. These students are trained 39 Zooms a week. They pick and choose where they want to get trained. When does that training end? Never. Those 20,000 students that are trained go to the 120,000 people that are not trained in my free Facebook group. That might be you. Go in there, do deals with them, post questions. They'll help you. They'll link in with you guys. Hopefully this has been helpful. Hopefully this has been something that you want to share. Let me know what questions you have below. If you guys have an attorney that thinks they know more about the due on sale clause or have a differing opinion, I'm all about collaboration. I'd love to. It's been probably 4 years since I've learned something new about the due on sale clause. There are people that are losing houses to the due on sale clause because they do know what they're doing and they're still losing houses. Perfect. Well, maybe there's something I can teach you because I've never met a single person that's lost a house to the due on sale clause or even had their credit damaged or a bank mad at them or any of that stuff. Now, what if I don't want the due on sale clause to be called in that situation? Well, that's where an executory contract would come in play. Let's say I take this title and this person, Tommy, decides, hey, I'm gonna sell this car to Pace for $9,000. We have this title. If you've ever bought or sold a car, you'll know that the title is signed by Tommy and he hands it to me. I control that title, but am I the person on title yet? I am not, because I have not gone down to the DMV, Department of Motor Vehicles, or DVM, or whatever they call it now, or the MVD. I think they call it the MVD. So in order for you to become the actual owner of that property, you have to take the title, which you have. Tommy has already signed it over to you. What happens if I decide I'm just gonna hold the title, but I don't record it? This is called an executory contract, okay? Why would I not want to record that deed or that title in my name? Well, in subject to, if you're worried about due on sale clause and worried about Wells Fargo finding out you're the owner, in an executory contract, the deed, instead of it being recorded in your name, you hold the deed but you do not record it, okay? So you actually have the deed, You control it. You maybe put it in a safety deposit box or what have you. It's literally one piece of paper, okay? I'll show you what one deed looks like, okay? I do this all the time. So here's a deed right here. Here's me holding a deed. This is one piece of paper. Maybe our editors can get this photo and pop this up on the screen, but this is a single deed. This is all you need to transfer ownership of real estate, is a deed, okay? So if I'm worried about the due on sale clause, that's the number one reason why an executory contract benefits the buyer and also benefits the seller, because it prevents the due on sale clause ever happening, is buying on an executory contract. Now, hopefully that makes sense. Why would I do that in a car scenario? Why would it make sense in a car scenario? Well, what if I actually don't plan on ever driving this $9,000 vehicle? What if I decide that I want to sell this to somebody else and I never want to have the title come in my name? I'm just going to pass this title to the next person, and I'm going to sell this title to this person for $12,000. Could I not just take the title that was signed over by Tommy and give it to the next person and sell it to them for $12,000? Could I not just do that? You can do that. This title has been signed over. You don't notarize who the buyer is. You notarize that the seller is transferring it. So the seller goes on, now you recognize this, right? So can I do this? Pretty powerful, right? So I can decide to do this with housing as well. I don't ever have to become the actual owner on record, but if I have the title in my possession and it's been notarized and I'm holding it, who controls that asset? Whoever holds it. So what did John D. Rockefeller say? John D. Rockefeller says, own nothing, control everything. Okay? So you control the title here, even though you don't own it. You control it. So you have the ability to do whatever you want with it. If you decide at any point you go down to the MVD and you want to record it, boom, you're the owner of record. But right now you control it, okay? So I can decide I can clean up that car, I can put new wheels on it, and I can go sell it for a profit, sell it for $12,000, and then that title, I just pass it over to the new owner, and that new owner goes down to the MVD, and they become the owner of record. So we use them, number one, in real estate, when we want to avoid the due on sale clause. Okay, the second reason we want to buy with executory contracts is we don't want certain people to know we own the property or control the property. So for example, I've got a property on 1006 South Southern Avenue, Unit 30. I just bought this deal. It's on a recent Real Deal episode. I self-filmed that with my iPhone. And I have a seller that bought a house. Check this out. This is interesting. Okay, seller buys a house. He buys a house with an FHA loan, which means how much money did he put down? Almost nothing. In fact, he didn't put any money down because not only did the FHA give him a really great loan, but he went to the state of Arizona and they gave him a down payment assistance program. Okay, so he has two loans against the property. He has the FHA loan and he has the down payment assistance program. So this guy literally bought this house for no money out of his pocket with a conventional FHA loan. Pretty cool, right? Why is this a problem? If I come along and he says, I want to sell my property, right? He wanted to sell the property, but he has no equity. Why does he have zero equity, Eric? He just got the loan, he put no money down, and somebody else covered his down payment. So he owes more money on the house than what it's currently worth. So can he sell the property without equity? He can, but he has to come out of pocket to sell it, right? To pay agents and closing costs and all that stuff. So I come along and I go, hey, I want to buy this property SubTo. I will take over these payments as long as you transfer what to me, Eric?
The deed.
Right? I want the deed and I'll take over your payments. I don't want my name on the loan, but I want the deed. Okay, cool. That's subject to. The problem is we get into a contract, get this nice, beautiful contract, and he agrees, okay, I like this SubTo. This is great. We take the contract down to our title company, and the title company does a search on the property and finds out that the seller has a down payment assistance loan against the property. Why is that a problem? It's a problem because these programs tell the borrower of that money that they cannot sell the house for 5 years without paying a massive penalty. So how can somebody sell a property to me with creative finance if they have a down payment assistance program saying he can't sell it, he can't refinance it, he can't do anything. He needs to stay in this property for 5 years or he's gonna have a penalty. How can he do it? Bada bing, bada boom. I can buy it on an executory contract. So the deed, I have the physical deed. In fact, this picture right here that I just showed you, that is the property that we're talking about. I control and have the physical deed in my hands. I just haven't done walking down to the MVD. It's not the MVD in real estate, it's called the county recorder's office, but I haven't walked down and recorded it even though I have full control of the asset. Okay, so I can sell the asset, I can do whatever I want with that asset. I'm currently turning it into an Airbnb. But I bought this property on an executory contract because down payment assistance program will not allow us to sell it or transfer the deed without incurring a massive penalty. The third reason is because a seller, okay? So let's say in a seller finance situation, the seller is unsure of you, okay? The seller is unsure of you. They don't trust you. And so they go, well, why would I seller finance and give you the ownership of the property until you've actually paid me? And you go, well, I need to have some sort of control. If you don't want to give me the deed, they go, okay, let's do an executory contract, which means the deed is sitting in limbo. The seller's already signed off on it saying that you will become the future owner once you record it, but you can't record that deed until the seller decides, A, they're sure of you. Okay, this is where this gets a little bit hairy, but I call it a dating contract, okay? So a seller will date you for sometimes a year. The deed will stay in limbo. Once they feel comfortable with you, they go, okay, sure, go ahead and record the deed. Or that's number one. Number two, you decide to sell it. 3, you decide to refinance it. Or 4, you decide to just pay them all the way off and the deed then comes in your name, okay? So a lot of times the seller says, if I seller finance to you, if you don't truly understand seller finance, go watch the F-150 story. I'm gonna seller finance to you, but I don't wanna foreclose on you if you decide you're not gonna make the payments. Well, the cool thing is in an executory contract, the seller doesn't have to foreclose on you because you never had the deed in your name. So there's no foreclosure needed. The seller just takes the deed back, they rip it up, and the seller stays the owner of that property. So there's so many reasons why an executory contract is used. I would say out of, let's say 100 deals, okay? I go do 100 deals with creative finance. I'd probably tell you 50% of them are SubTo or hybrid. And I'd say about 30 to 40% of those are seller finance. I'd say a good 10 to 20% of those are executory contract. Now, final part of this video you need to understand. Have you learned a thing or two, Eric? Mm-hmm. Okay. So the other thing that you need to understand in executory contracts is they're actually not called executory contracts, okay? In your individual state, they'll be called something different. So Arizona, an executory contract, we don't actually call them an executory contract. In fact, nobody calls them that except for attorneys, okay? Arizona, do you know what we call an executory contract in Arizona? It's called an agreement for sale. Okay, so we do agreement for sales all the time. Texas or Florida, okay, you can do a land contract. They're also called contract for deed. You've also got bond for deed. They're also called installment sales. And there's about 5 other names for these, but it depends on the state that you're in. Okay, so if you go on Google and you type in executory contracts and then your state, they'll tell you what yours is called. In Arizona, ours are called agreement for sales. Nobody calls them a land contract or contract for deed, bond for deed, installment sales here in Arizona. We're gonna do another video all about why I like executory contracts over novation agreements, and novation agreements are a lot more risky than an executory contract in another video. It no longer happens to me, but back in 2018, it would happen to me a lot, where I could not overcome the objection the seller would have about due on sale and their willingness to sell their property to me via SubTo. And so I would acquire on a lease option instead of acquire via SubTo. Now, why is that better for the seller? It's better for the seller because there is no due on sale clause and there is no deed transfer either, okay? So here's what happens. The investor says, instead of us just taking it over subject to, we're gonna do a lease option, and here's what a lease option looks like. It is actually two separate agreements. There is a lease, okay, where I am the tenant. I am not the real estate investor, I'm the tenant. I have the ability to rent the property from that landlord, and that is one agreement. That is the lease agreement. You guys have all seen lease agreements 100 times, so you don't need me to talk about a rent agreement. It's just renting the property. Then you have a separate agreement, which is called the option agreement. And this option agreement is typically purchased at a fee. It's like an upfront fee. We call it an option fee. And that option fee for me, I'll get to how I sell properties on lease options, but usually it's like 1 month of rent extra. And what this does is this option gives me a locked in price and usually 3, 5, or 7 years to execute my option with the seller and buy the property from him. Now, this is the traditional way a lease option works. The way that I would, as the real estate investor, execute my option is I would have to go to A bank, or B, cash, okay? And I would go to the seller, let's say in 3 years, and I'd say, hey, seller, I'm ready to execute the option. I'm ready to buy the property from you. Thank you for doing a lease with me for the last 3 years. I'm now ready to exercise my option at this time and actually buy the property from you and wipe you out of the transaction. So where is a lease option beneficial? A lease option is beneficial because what it does is it protects the seller. The seller can continue to cash flow and still have the benefits of ownership. The buyer locks in a future price, so they know the landlord cannot just sell the property out from underneath them. The landlord is locked in as well. And a lot of times the lease option, the lease does not get raised, right? The rent does not get raised, so it locks in the lease payment for a number of years. What it then does is it gives the confidence to this investor to say, okay, I know that I need to go build my credit, I need to fix my credit, I need to get more income, I need to save up a larger down payment. So at some point I can go to the bank, but I have the confidence to know that the seller's willing to sell it to me because I have an option contract that gives me the ability to go and buy this property at a locked in price, at a locked in time frame that gives me the time and the energy allocation to go and do this thing. Okay, that is what a lease option is traditionally used for. Now, what's great about this is I, as the investor or the tenant, I can turn around and do a number of things with this house. I can turn into a short-term rental, midterm rental, I can turn into whatever I want it because I have rights as a tenant to use this property for my own good. Now, what I also can do, all right, this is what we call a sandwich lease option. These are not that common, but there are people that teach these and they just don't happen that often. They are out there, but they're not super common, okay? What will happen is I decide, okay, now I have control of this property. I have it underneath, let's say it's a 3-year option, and I have 3 years of rent locked in, and I have 3 years to execute my option. All right, my rent payment, let's say is $2,000 a month is my rent to the landlord. I have an option fee of, let's say, $2,500. Okay, perfect, that's my structure, and I have 3 years to go get a bank loan or pay the property off in cash. All right, now what I can do is I can then go out and I can then find another tenant buyer. Okay, this is what we call a sandwich lease option. I bought the property on a lease option. I can then turn around and sell the property on a lease option to another tenant buyer, where I can go, hey tenant, your property, I'm gonna rent this to you for $2,400 a month, and I want an option fee of $7,500, okay? Now, what did you just see me do? You saw me arbitrage a lease and an option, and I give them 3 years, okay, to go out and execute the option. So if they don't execute the option in 3 years, let's say that in 3 years they haven't fixed their credit, they haven't had additional income, they are now like, oh man, I need to extend. Well, they could extend to 5 or 7 years, depending on my agreement, as long as I have that same agreement with the seller that says I can extend to 5 or 7 years. And 1,000 different things could happen in the situation. I could raise their rent, I could add for another option fee. That's typically what I would do, is when my tenants could not execute their option at the end of 3 years, I would ask them for an extension on the option fee and I would get another $7,500. Now, You guys might say, why would anybody do this? I'd probably say hundreds of times a month all over the country this is happening, where investors come in and go, I don't have the money to buy the property. I'm just gonna arbitrage this and go find my own tenant and get that tenant to have the ability to have a locked-in option. Now, some people would ask, why would I do an option? I would do an option if I just landed a job and I have not had that job long enough to go get a bank loan, but I also don't want my landlord selling the property because I love the house, I'm excited about it, and I want 3 years to build my credit and put myself in a situation where I can go get a bank loan. You want an option on that house. You want the option to buy that property so that that landlord is locked in and guaranteed to sell that property to you, if that makes sense. So that is what a lease option is. Now, what is so cool about the option is that you can draft the option to be whatever you want. All right, so we're gonna talk about now, we've talked about what a lease option is and how it benefits multiple people. It overcomes a lot of sellers' need for the due on sale clause. They're worried about the due on sale clause. It gives the seller a locked-in lease, gives them a locked-in option price, gives the investor the ability to get into the deal with very little money or anything out of pocket, especially if you go get your own tenant and their rent payment is higher and their option fee is higher than you covered your cost to get into the deal and you're making $400 a month on arbitrage plus $5,000 up front. Pretty awesome. Sandwich lease options are pretty great. I don't do them anymore because I want to own the property, all right?
Now, here's the common myths about the due on sale clause, okay? Due on sale clause is really funny because people think that when they get the due on sale clause, that what the bank is saying is they think the bank is saying, A, I want the house. Cody, are banks in the business of wanting houses?
No, the banks don't want to own real estate. They want to control it. They don't want to actually have responsibility for taking care of the real estate.
Right, there we go. So due on sale clause, they do not want the house. Now, if they have to take the house in order to get their debt paid back, then they will. But at the end of the day, what the due on sale clause is doing is, well, that's a common myth. And the other common myth is that it happens immediately. Okay, I'm going to give you a quick story. We had a student, actually, Yui Win, out of Houston, Texas. I'm golfing with Scott Horn, who has been in creative finance for 35 years as a closing attorney, subject to seller finance, all the things you can imagine. He's also an RMLO. We'll probably bring him onto a Sunday service episode in the future. I'm playing golf with him and Eric Sage. Okay. Probably the most creative couple of guys you can imagine on a golf course that has ever been assembled. Right. And what happens is I get a text message from Yui Win out of Houston, one of the SubTo students. And he goes, Pace, I just got the due on sale letter from the bank. Oh my gosh, I need you to call me. Can you help me? And I go, yeah, man, I'll call you after my round of golf. And whoa, did that freak him out. No, man, I need an answer right now. I need help right now. And I said, man, the due on sale clause is not immediate. It's not going to happen immediate. It takes months and months for this to happen. Due on sale clause happens immediately. It does not happen immediately. That is a myth. Okay. In fact, what happens with the due on sale clause is that they are forced, unfortunately, the bank, to put the home into a foreclosure state. Okay. And that takes anywhere between, depending on the state that you're in, takes anywhere between 3 to 12 months. So essentially what you have is you have 3 to 12 months to solve the due on sale clause, which is the easiest thing on planet Earth to solve. It's almost as easy as going down to Whole Foods and buying that bread, that peanut butter, and that jelly. It is incredibly simple to solve the due on sale clause. Okay, and Cody and I have had the due on sale. We'll tell you a couple of stories about how that we've solved that. But let's see if we've got any questions in the mail, or not in the mail, but in the side chat. Ooh, Nick Legamaro, good friend of ours. You know Nick Legamaro out of Dallas. He's very, very creative investor. He's also a SubTo student. If you guys are looking to do deals in Texas, Nick Legamaro is one of the best people to do deals with. He's amazing. He says, how long does it take the bank to accelerate the payoff? Do they foreclose? And what I love about Nick is he knows the answer to this. but he is a good friend. He was actually just texting me. We're going to bring him on a special Zoom here in a couple of weeks. Nick knows the answer. He's just trying to encourage a good conversation. How long does it take the bank to accelerate the payoff? It takes months, not weeks, not days, not 1 month. It's 3 to 12 months is what it takes. Okay. Peggy Stevens says, how did Wells Fargo know about it? We're going to get to that. We're going to talk about how does a bank find out about the deed being transferred. Remember, Tom transferred the deed to Cody, and Cody bought the property subject to. Okay. So how does a bank find out about that? That'll be the next conversation we talk about here in the next couple of minutes. Looks like everybody's on the same page. Everybody getting some value. Everybody enjoying this so far. All right. Todd says, isn't the deed transfer at the courthouse? Seems like the bank would find out then. No, the bank actually doesn't find out then. The bank is not sitting there waiting for the courthouse to, and it's not the courthouse, it's the county recorder's office. Okay. The county recorder's office is who records the transaction, and that is not when the bank finds out about that. It's not like the bank has a notification with your archaic, ho-hum, horrible county recorder's website that notifies the bank of a deed transfer. Okay. It doesn't happen. It's not going to happen. The technology just doesn't exist. Okay. Doesn't exist the way you think it would. So no, that is not how they find out. They're not doing there was a point a couple of years ago where there was a group of creative finance investors that were saying that Wells Fargo, Cody, had invented this. They had invented this software to scrape through the county recorder's offices to see who had transferred deeds on properties that they held mortgages on. And I did the research, and ultimately the person that was spreading the rumor was also selling a coaching course on how to stop the due on sale clause. And you guys got to find out where your information's coming from. Okay. That Wells Fargo thing was never going on. It was a total hoax. It even made this guy was paying Yahoo News. I don't know if you guys know this, but you can pay Yahoo News and Huffington Post and stuff, $500, and they'll run an article that you wrote. It's crazy. And so this guy was actually putting this information out there and pontificating that there was a problem, that he had the solution to this entire thing. It never existed. Okay. What it is a lot of times these gurus who don't really have any real value to provide, they make this massive thing up, this big boogeyman, so that you have to buy a product from them that solves this problem that really doesn't exist. Okay. So no, that is not really how these banks find out. We'll tell you guys how they find out here in a couple of minutes. And no, the deed is not transferred at the courthouse. It's transferred at the county recorder's office. Okay. Somebody says, what's the best SubTo script? Dorian Clark, that's a great question. That's something that we give all of our students. Really, really good information. We have done over 1,100 Zooms in the last 14 months inside of the SubTo mentorship. I know it sounds daunting, but it is true. I would work with one of the students if you want to get a good SubTo script. Check this out. Aaron Lease. My first deal I just closed last week. It was SubTo, and I learned it from Pace. The seller was so stressed out and was super thankful we reduced his stress. Congratulations, Aaron Leitz. I remember 3 months ago, he was like, I just don't know when I'm going to get my first deal. I go, bro, keep taking action. Your first deal is coming. Okay, so check this out. Justin Yuhan says they find out by a title search. Cody, do you think a mortgage company like Chase, Bank of America, or whatnot, do you think they're actively doing title searches on deed transfers?
No. They're spending their time trying to figure out how to bundle up those mortgages and sell them to some other servicing company or some other hedge fund.
Super interesting that people don't understand that. They think that these banks are lending money and then they've got employees watching the title changes and all that kind of stuff. Guys, this has been happening for over 100 years. Subject to seller finance has been happening for well over 100 years. And even before that, seller finance has been going on for 1,000+ years. No joke. Okay. And when they started doing, I'm going to tell you something really interesting. So Frank Lloyd Wright, one of the most prolific architects of the last 1,000 years, was also one of the most creative investors on the planet. This guy, the way he bought his first property was with a novation agreement. He bought land and he didn't give he basically bought land on a novation agreement. He built a property, he refinanced and paid the seller off at the time he refinanced the house. And that's when the seller got paid. That's how he got his first house. He also built a house based on selling portions of his own body as stock. He says, I need money to build a house. And I'm a pretty famous architect. So what I'm going to do, I'm going to sell my body as if it's shares in a stock. And I'm going to give people a portion of my future earnings for the debt that I take on. And he went off and built a $15 million home based on selling his body as stock. Guys, this kind of stuff has been happening for a very, very long time. Creative finance and these types of things. There was other things that he had done where he had taken over debt on other properties, and which is subject to. Before subject to was called subject to, you're just taking over the debt, leaving it in somebody else's name, and transferring the deed into your name. It's been happening for a very, very long time. So these banks who are giving you money, their job is to lend money, and then their job is to bundle all of these loans up and sell them to a servicing company and rinse and repeat, rinse and repeat, rinse and repeat. The ability for them to stop what they're doing, which is writing and creating millions and millions of loans every single year, millions, not thousands, millions and millions and millions of loans. Stop and wonder who transferred a deed to another person on a property that the loan is being paid is so unlikely that it's laughable. It's so unlikely that it's laughable. However, they do find out. And there are reasons why they do find out. So we're going to get to that in just a couple of minutes. Just let me clear out the comments here. Is this the Liz pendants you showed us, Pace? No, Ben Diaz, this has nothing to do with the Liz pendants, but good question. Isn't the deed transfer the courthouse? Nope, we touched base on that. Let me just scroll down here a little bit more. Long time Sunday service viewer, first time here as a SubTo student. Jeff Hamilton did just join SubTo. I saw him this morning, or maybe it was yesterday. So Jeff, good to see you in here. Really, really good to see you in here. Randy says, yeah, I got my first deal today and it was no money down SubTo. Congratulations, Randy. That is so amazing. Awesome. They find out when they review their books, loans, when they sell them, but they seldom care so far as the loan is in good standings. That's a great thing. I don't think that is the case. We're part of multiple masterminds with very high level creative finance investors. I have never heard somebody getting a loan call due when somebody is selling a package of loans. I've never heard that. Doesn't mean it hasn't happened, but I've never heard that. Dara says, the creative options are known by old school investors. Yeah, it's crazy what they used to do. Old School Funk, thank you so much. Says, you have great content, guys. How much does it cost to join SubTo, Pace? I have saved money. I'm ready. Old School Funk, I wish I knew your name. If I were you, I would link up with one of the SubTo students in your local area and ask them for some help. Okay, that's the cost of the mentorship. Ingrid Hernandez, one of Frank Lloyd Wright's houses is for sale right now. Had no idea he cold called on it, and they are willing to reduce price over $7 million. Oh my gosh. Okay. So here we go. KK Films. This is a good one. Should I sign the deed in my name or a trust, or does it matter? Now, you're going to get people that are trying to sell you a product are going to tell you that to avoid the due on sale clause, you need to purchase it in a land trust. And this is a common debate. Every time I have a new conversation with a new CPA or somebody who's versed in real estate that has either they're an attorney or they're a CPA that actually understands these things, it's one of the first questions I ask. Are you a land trust guy or a non-land trust guy? Because it seems like it's like the Capulets and the Montagues. People are constantly fighting over this thing. It's like a turf war. Some people are like, land trusts are stupid. It's a waste of time. Then the next conversation you have with somebody who's been doing real estate just as long as the other person, and if I told you both these people's names, you'd be like, whoa, that guy's a legend. Whoa, that guy's a legend. Both of them could not have differing opinions about the subject, and tonight we will give you our opinion, okay? Daniel Robbins, good to see you. Judy Raynham says, first live Sunday service. Can you believe that Cody made it all the way back from a 7-week trip? Holy moly. Wow.
Wow.
It seems like we should do a general Q&A instead of a topic based Zoom, or not Zoom, but Sunday service at some point, because we get so many good first timers coming in here asking questions, and due on sale clause might be over some people's heads, and they might be like, I don't even care what due on sale clause. I just want to get my first deal.
Yeah.
Mark says, do you have a separate purchase agreement you will share with purchasing a seller finance property? Who prepared the note and mortgage, the closing attorney, etc.? Mark, we do have those documents. However, we have spent over the last 7 years of doing creative finance, we have spent probably close to $40,000, $50,000 drafting those documents, redrafting those documents, updating those documents based on new laws, new legislations, new things that we've learned based on relationships with the sellers and things that have gone wrong, things that have gone well, things that we just want to change. We change those documents every 3 to 6 months. And unfortunately, I will never in my life ever give those documents to anybody but a student who is trained to use them. So it's like handing you a loaded gun. If you don't know how to use it, it's the last thing I'm going to do is hand you a loaded gun. So yes, we give them away to people who are inside of a mentorship, who are learning how to actually use them properly. Okay. Alexis Adams. How true is it that if you record the deed under a land trust, the bank can't call the due on sale clause? That is actually incorrect. Okay. It is incorrect. And if anybody wants to argue with me, please take this Sunday service recording and send it to anybody that disagrees with me. And I would love to have a cordial, amazing conversation on another live of Sunday service, but it is 100% incorrect. A land trust does not stop the due on sale clause. A land trust hides who the new owner is, but it doesn't mean that the deed did not transfer to a new entity. Okay, so basically what they're doing, I'm going to get really intricate on this really quick for everybody, and we're going to go fast through this because I think this is going to melt some minds. But let's say that I'm buying the property from Tom. Okay, and Tom has this magical thing called the deed, which we've already established is the receipt of ownership. And anybody, we've got 300 people watching in here live right now, so thank you so much. Between Cody's YouTube and my YouTube, we've got 300 people watching live. So thank you so much. But you did miss at the very beginning, we talked about some of these amazing art installations that I do on this whiteboard and who Tom is. Right now, you guys have no idea who Tom is. Okay, you don't know if he has a mustache, if he doesn't have a mustache. You don't know what the deal is. But essentially, if Cody's going to buy the property subject to, Tom is going to deed the property over to Cody. But the debt, which is still owed to Wells Fargo, is still in Tom's name, right? That's the exact definition of subject to. So a lot of people go, well, this little arrow right here, this little magical arrow is the transfer of the deed from Tom to Cody. And this is where Wells Fargo will notice, and they'll go, oh my gosh, I see what you just did. And they have a big sad face and they say, nope, due on sale. We want this loan paid off immediately because Cody was not verified for this. So some people believe, because of the Garn-St. Germain Act, that if you buy if you take the deed and the deed transfers through or to a land trust, okay, which is not an LLC, and the land trust beneficiary now is hidden. You cannot find out who the beneficiary is in 48 states, at least. Arizona, you can. In 48 states, you cannot see who the beneficiary is. And the beneficiary is another word for owner or somebody who benefits from the land trust. Then the beneficiary can then be your LLC. But the only thing that the bank sees is they see that the deed was transferred to a land trust. And that land trust could be called Tom Family Land Trust. And so a lot of people who are, in my opinion, wrong, they think that if you transfer the property to a land trust, that because of the Garn-St. Germain Act, it prevents the due on sale clause from happening. I'm going to tell you right now that that is not correct. Half of the time when I hear somebody say, I had the due on sale clause called on me, guess what they did? They bought the property in a land trust. Land trust is a hoax. Land trusts have their purpose. They are absolutely amazing. We talk about them, we teach them, but a land trust should never be used in the hope of preventing yourself from getting the due on sale clause called on you. It is incorrect. And if you learn that on YouTube, just like you're probably learning this on YouTube, I'm sorry, but it is incorrect. Okay. It is absolutely incorrect. It's somebody trying to sell you something, and the people who are trying to sell you land trusts and land trust education are actually very smart people. And I don't think they intentionally mean to harm anybody by selling these products, but they're selling you something when they're telling you that that is a way to prevent the due on sale clause. And I apologize for saying that and stepping on somebody's ability to make money, but it is absolutely incorrect. Christopher James says, what if you currently do not have a land trust? What's the next step? Use LLC? Well, Christopher, we already established that buying through a land trust does not do you much good, does it? Josh Archer says, hey, Pace, first time watching Sunday service. Love Wholesale Hotline. So much wisdom. Anyone in Denver, Colorado want to squat up by? We have a lot of Denver students, bro. Nisha Hyde says, I'm diligently working on a couple of SubTo leads. One is buying a new house and needs this one to appraise or needs to sell. So how could we bring this to the mortgage company without triggering? Nisha, bring that to me on Tuesday, please, into one of our live Zooms. I'd love to chat with you about that answer. It's a longer answer. Michael Mason, who may I contact to help on a foreclosure expense negotiation? They're trying to charge $8,000 on an $11,000 mortgage. Any thoughts? Thank you. Michael Mason, I would call Rochelle Jarvis from constantclose.com to handle that. Okay, sounds good. Boom, boom, boom. Isn't it better just to tell the bank I am taking over the title and the payments? I know Aaron Leitz already knows this answer. He's now a SubTo veteran. He's got his first SubTo deal closed. He does know the answer to this question. Cody, have we ever notified a bank that we're taking over a deed but keeping the debt in the seller's name?
No.
First and foremost, if I told you that you needed to do that, who would you call?
They don't have a department for that.
They don't have a due on sale clause department?
Nope.
Guys, when you call a bank, who do you typically get a hold of? And by the way, Aaron Leitz knows the answer to this, but one of the most challenging parts of stopping a foreclosure, let's say a seller's in foreclosure, one of the most challenging parts of that is just talking to somebody at the bank that has a brain in their head. So when you want to call, let's say you want to call, I have seen this on YouTube as well. People go, oh yeah, we send letters to the bank to let them know we're buying subject to. I'm like, and who's reading these? Who is reading these that even has a brain in their head? The majority of the employees are not. People think that like bankers are sitting behind a mahogany desk with leather-bound books behind them, reading letters and answering your phone calls. That is not how mortgage companies operate. The majority of their people are overseas virtual assistants that are answering their customer support calls, and you want to call them and let them know that you transferred the deed and you bought their property subject to. Aaron Leitz does indeed know the answer. The answer is absolutely not. It's a waste of your time. Even if you wanted to, I don't even know who you would call. Cody, you remember that property we bought from Cody Sperber, the one up in Whitman that ended up having cesspools instead of septic tanks?
Yes, I do remember that.
So that was an interesting property, but I want to bring this up because there was a property that Cody and I bought subject to a couple of years ago. And we decided we didn't want that property after about 3 or 4 months of working on it because we found out that some of the information that was given to us, not from Cody Sperber, but from the seller, was actually incorrect. And so we decided to wholesale the property and get rid of it. It was a subject to deal. But in that process, what I did is I called the bank because I wanted to show somebody proof that even if I tried to get the bank to call the due on sale clause on me, I couldn't do it. Okay? So what I did is we were driving to Whitman. I was with Anna, and I told Anna, I was like, let me call the bank. We called the bank, and it was like a 4-hour round trip. And I kept calling the bank, kept calling the bank. And Anna was recording me on her cell phone. I called the bank multiple times, kept saying, who's your boss? Who's your boss? Who's your boss? Okay, well, who's that person's boss? I could not get a hold of somebody that even knew what due on sale clause was. I was basically saying, we don't want this property anymore. We just want to test something out. If you guys understand subject to, and we transfer the deed, even though the blah, 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 blah. People are like, I'm confused. Are you trying to figure out where to make your payment? Because that's not my department. Okay, great. Can I talk to somebody? Guys, that is what it's like to try and call a bank. You are not calling a bank and talking about due on sale clause. I can promise you 99% of their employees that answer the phone have no clue how to do that. Okay. Besides probably setting up a servicing company and insurance, is there anything else people should do? Yes, absolutely. We will get into that 100%. Okay. Alexis says, follow-up question. So should we transfer the deed to an LLC and not a land trust to lower the chance of having the due on sale clause called on and just having an LLC, that single property? So Alexis, this is a really long answer that I give my SubTo students. It probably would take me about 30 to 45 minutes to thoroughly answer this question for you. Okay. Here's the thing, Alexis. Number one, you can buy a property in a land trust. You can, but don't plan on it stopping the due on sale clause. Okay. I never said don't buy a property in a land trust. I never said you can only buy it in an LLC. I did say, however, there are 48 states that the land trust is effective in, and there's 2 states that are not. And what is a land trust's sole purpose? What is the purpose of a land trust? Is to hide the ownership of who owns the property. That's what a land trust's sole purpose is, okay? So in the state of Arizona, our land trusts do not hide who the owner is. And so a land trust, we've just learned how to buy properties without land trusts. And we learned that a land trust, for the most part, is an absolute waste of your time, your money, etc. So if you want to buy in a land trust, go do it. It will add provided anonymity in terms of maybe a renter finding out who owns the actual property. Land trusts are amazing. And if you guys want, we can talk about land trusts deeper on another day where I can bring in an actual attorney to talk about land trusts. However, I want you to remember land trusts do not stop due on sale. So if you're going to buy a property in a land trust and then assign the beneficiary to an LLC, which is actually how it's done, a land trust does not stop due on sale, and neither does an LLC. That is not what stops a due on sale clause. Okay. So let's go into a couple of things. Cody, let's give everybody here a couple of ways that a due on sale clause would have gotten figured out by the bank.
One would be, let's see.
Well, that one that we got called due, the one on, what was that called?
Well, Dutchman, but
Dutchman,
that one
Lost Dutchman Trail.
Yeah, that was a small local bank.
Okay, so let's do this. It's a couple things, okay? Mm-hmm. Small local bank was part of it, but that's not the entire story. So let's make sure we give people the entire story. It was a small local bank, A, and B, that loan, if you remember, was in foreclosure.
Yes.
And we transferred the deed too quickly after we redeemed the foreclosure. And because, so this was actually the main problem right here. And because we caused that problem, and it was a small local bank, the then small local bank says they see the situation and they do a big frowny face and they go, we saw after the redemption of the foreclosure, which redemption of foreclosure means we caught up the seller's payment, we bought it subject to, and we transferred the deed too quickly. The small local bank then, when they were redeeming the loan in their computer system, they noticed that the seller who just recently redeemed their loan was no longer on title. That is what caused that. And it was because it was a small local bank, right?
Yep.
So I don't want you guys to worry necessarily about small local banks. I want you to realize that what we should have done on, what was it? It was Lost Dutchman was the name of the property, right?
Mm-hmm. Yeah.
So then what we should have done on Lost Dutchman is we should have actually, I'm sorry. Let's go in order. We should have redeemed the foreclosure, which means we should have caught up on the foreclosure. We should have waited a cooling off period of at least 5 to 10 days. We didn't even wait like a day.
Yeah, it was like immediate.
It was like immediate. And then C, transfer the deed later. Now, somebody like Sergio, who asked a really good question, Sergio is going to be like, Sergio's in here. Shout out Sergio. He's going to say, how do you transfer the deed? What if the seller dies in the meantime? And what if the seller's brother's cousin, such and such and such, is not there for you to transfer the deed after you've already redeemed the money and you've spent the money on the foreclosure? Well, Sergio, what we would actually do is we would actually hold on to the deed. So we would have the title company issue the deed to us, and we would be holding the physical copy for probably a good 30 days. And we would already have the warranty deed in our pocket, our physical pocket, our tangible deed. So we don't need anybody else to come along. Okay. So, here we go. There's number one, small local bank, I would say is probably the most common one. And then number two, improper insurance. Okay. So you do your insurance incorrectly, which means when you take over a property subject to, you are taking over the PITI. Cody, what does PITI stand for?
Principal, interest, taxes, and insurance.
So when we take over a property subject to, we're also taking over an insurance policy subject to, correct?
Yes, correct.
So that insurance policy, you have multiple choices, and we teach this in SubTo in great depth. So Sergio asked a question about this. Look at this. Sergio says, how did you know I thought of that? Because I know Sergio's brain, and I appreciate Sergio tremendously. He asked really great questions. So with insurance, guys, there are multiple options. There's an option A, an option B, and an option C with how to handle the insurance, but we don't have time to go into this. But I can tell you we went through this for 6 hours with our actual insurance agent inside of the SubTo mentorship. Okay, so if you guys, Sergio, I would suggest you go and find that. Fernando Diaz says Cody is the man. I tend to agree with that 100%. Okay, Justin Yuhan says, he came back and he says, so they found out through a title search. No, Justin, they did not find out through a title search. When they went into their computer system to redeem the foreclosure, because remember, this property on Lost Dutchman was in foreclosure. Cody and I redeemed the foreclosure. Bada bing, right here. We redeemed the foreclosure, which means we caught up the payments. What that did is that triggered the small local bank to physically go back to their system and go, okay, let's verify all the information of the seller. Let's make sure everything's good. Let's reestablish the loan. Let's make sure everything's good. And in that process, they noticed that the owner of record was not the seller. Okay. And so a title search is very different than looking at public record. A title search is calling a title company and having them pull a preliminary title report. That is what a title search is. Unless you're just saying manually looking up and seeing who is on public record, then yes, they found out by looking manually at public record at one house that we redeemed and immediately closed on the next day. So it wasn't a title search. It was them redeeming the loan that we had pulled out of foreclosure by catching up the payments, that they were going back to their computer system manually. Okay. Okay, cool. This is an interesting thing because what did we just talk about here? I love these questions. They stress me out. And this is why this stresses me out. Because Joshua, I don't know if you tuned in late, bro, but look here. Your answer is right on the screen. We did cover this. I wrote it out as I spoke it out loud. So we said, Josh asked a question, is there a certain length of time you are allowed to hold the deed before recording? Oh, actually his question is different. So thank you, Josh. Guys, you can hold the deed for as long as you want. The question you should be asking is, what point does maybe the seller decide I could sell this to somebody else because this idiot hasn't recorded their deed, right? Ooh, this one's good. Sergio says, how do you protect from a seller coming back years later and threatening to tell the bank unless you give them lots of money? I would tell them to call the bank because, Sergio, the documents that we have put together, one of the documents that you have access to because you are a SubTo student, the documents specifically state that if the seller ever goes to the bank, causes issues with our home, which we are the owners of, if the seller ever does that, they have an immediate fine against them of $50,000, of which they sign off on in the contract that you have access to. So go find that, Sergio. You'll see that. It's a damage. It's basically a damage document that says if you ever alter, call on a property and providing a copy of a new policy in effect to the lender, two different things. Yeah, so they're two completely different things. So remember, we're taking over the original loan subject to. And when we take that over, we also are taking this home that I'm currently sitting in subject to. I did not get a new insurance policy because I know the seller. He's a personal friend of mine. I'm not worried about any sort of insurance issues whatsoever. But on other houses, we always change out the insurance. So you've got option A, you could keep the insurance in place. Option B, replace the insurance. Or C, add yourself as the additional insured. There's multiple ways to do it, and we could do an entire Sunday service just on insurance. Or if you are a SubTo student, we've, again, done 6 dedicated hours on this exact topic with an insurance agent live in our mentorship on our Zoom. So go check that out. A third option, Cody, what would be another third way that a bank would find out and call the due on sale clause? Do you have any ideas? Anything we've missed? I have one that's real so obvious that you won't even think of it. Is if some stupid ass investor misses a payment.
Oh, I was like, what? What are they?
So obvious, right? It's like because they find out because they go to issue a foreclosure notice and they realize, oh my gosh, this guy doesn't even own the property. Oh my gosh, they transfer the deed.
Yes.
And guys, if you miss a payment on a house, that is due on sale clause is probably the least of your worries. I wouldn't worry about that. Missing a payment is a big one. This one does happen. These are the top 3. Top 3 are a small local bank. You redeemed it at an improper time. Small local bank actually keeps an eye on their loans, which other banks don't. You did the improper insurance. Or 3, misses a payment. 4, here's another one. This one's really, really good. Incorrect paperwork. Okay. Sergio alluded to this earlier. Sergio, that was a really great question. We'll have to probably follow up with us on next week's episode. Another way that this happens, due on sale clause, is an angry seller. Okay. Typically it's a husband or a wife. Cody and I actually, this was an interesting one. What was that one in Chandler? Your buddy's dad's house we bought subject to.
Yes, the Mercury.
Mercury. So we buy the house subject to. Check this out, guys. This was an interesting one. So the seller, oh my gosh, do you remember this when their attorney sent us a letter?
I remember the exact thing because I got the phone call from the people.
This is a good one. So the seller and his wife, they got a divorce. Okay.
Years and years ago. And it was, let's say it was a Wells Fargo loan. I don't remember. That was probably a $350,000 SubTo, something like that. Yeah, something like that.
Okay. So both the husband and the wife are on the mortgage. Okay. They're both on the mortgage. However, when they got divorced and they split up, the wife who stayed on the mortgage was told by the judge that she needed to deed the property over to the husband, so that now the husband or the ex-husband, he has the deed by himself. He's on the deed. However, the wife is still on the hook on the mortgage. So when we transferred the deed from him to us, did we need the seller's, do we need the ex-wife's permission to transfer the deed to us?
Nope.
No, we did not. This gentleman had the sole right to sell the property to us because he controlled the deed. The person who controls the debt is not the owner. Okay. And so what ended up happening is we got a call from the attorney who represented the wife. This was like years later, years and years later. What was that call?
Basically, I mean, it seemed like the attorney was confused how she was still associated with the property. They were just basically trying to see how they could get her taken off the mortgage. And our response was getting our attorney involved and basically saying, hey, we cannot take you off the mortgage. You're on the mortgage. We bought the property. We own the property. Sorry.
There you go. So we ended up having Sean St. Clair, our attorney.
Yep.
Our attorney called their attorney and hammered it out. But this lady was threatening to call the due on sale clause, saying, my name's on this mortgage and you're not the owner of this mortgage. She was threatening, and we essentially got our attorney involved and handled it. So those are the top 5. Now, there are a couple of others that are so minuscule and so small that it's not even worth talking about.